The clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392 offered by Ms. Tlaib of Michigan, designated as 33.
The amendment will be considered as read, and the gentlewoman from Michigan is recognized in support of her amendment for 5 minutes.
Thank you so much, Mr. Chair. You know, one of the weaknesses of the Stable Act is the lack of strong consumer protections for our residents. This is reflected on the fact that this bill is silent on the authority of the Consumer Financial Protection Bureau, CFPB. The amendment seeks to remedy this omission by explicitly affirming that the authority of the CFPB with respect to stablecoin issuers and customers who own stablecoins. So stablecoin users, again, many of our residents, right, deserve the right to dispute charges, fight fraud, and contest errors. Our residents deserve the rights under the statutes like those protections under the Electronic Fund Transfers Act. And again, these are basic consumer protections that many of us, I hope, support. I would also hope that all my colleagues would agree that any regulatory framework for stablecoin issuers must prioritize robust and effective consumer oversight for our residents. I also hope that you all agree that, you know, many of the users deserve the same protections, just like we do for any other financial products. I'll also note, you know, I think this is important, that CFPB was established, as you all know, in 2008 after the 2008 financial crisis, which was facilitated by predatory financial dealings and scattershot, you know, consumer protections. In the run up to the crisis, Mr. Chair, you know, one of the regulatory protections, you know, was weakened, and commercial investment banking sectors were allowed to merge. And so the Stable Act that we have before us will similarly undermine, I believe, the separation between banking and commerce by allowing non-financial companies to own stablecoin issuers. We have seen this before, and while some benefited tremendously, it was a horror story for millions of our families. I urge my colleagues to please stand up for consumer protections. These are basic rights, and that they can prevent, again, financial disasters, both for individuals and for our broader economy. Again, I urge my colleagues to support this amendment. With that, Mr. Chair, I yield.
The gentlewoman from Michigan yields. Is there further discussion? Does the gentleman from Michigan insist on his point of order?
I do not.
Michigan on Michigan violence there just averted. I'm so pleased. He does not insist
Just
on
trying
the
to
point of order.
see if everybody's paying attention, Mr. Chairman.
The gentleman from Ohio, the chairman of the subcommittee on national security, Mr. Davidson, is recognized to strike the last word.
Thank the chairman. I do move to strike the last word, and I do oppose this amendment. The Consumer Financial Protection Bureau isn't referenced by the legislation, but frankly, their authority is at least clarified when it comes to stablecoins. The CFPB has not been silent about stablecoins. In fact, just in January, on his way out, Director Chopra tried to limit the ability of individuals to own their own cryptocurrency with self-custody. He literally wanted to have the CFPB become the regulator for custody. And you know, the premise there is that the government somehow gives you the permission to transact, and it does not. So he with no real structured rulemaking process, decided that he was going to insert the regulatory authority of the U.S. federal government via the CFPB into everyone's transactions. So, you know, the CFPB hasn't been silent about stable coins under, you know, the wrong director. They may not stay silent on stable coins. And we want to clarify with this legislation what exactly the entire federal government is supposed to do with respect to stable coins. That is the point of the bill. So the idea that you're going to do nothing to limit the ability of the CFPB, well, to the extent CFPB continues to function the way that it has, they haven't shown restraint even in areas where they're not supposed to go. So we may need to put, you know, further clarification to say, this means you, CFPB, because they seem to be willing to ignore other statutes and impose rules where even their underlying authorization says they're not supposed to. So I don't support this amendment. I hope our colleagues will oppose it as well. And I'm happy to yield to anyone else if they want to make the similar points. With that, I yield back to the chairman.
The gentleman yields back. Who seeks recognition?
I seek recognition.
The ranking member seeks recognition, and you are, she is not. Yeah.
Okay.
Strike the last word.
Move to strike the last word. I thank Ms. Tlaib for this amendment. It is so important that we recognize consumers have a right to know and understand what is happening with some of the issues that they're confronted with every day, like fraud. And they need some place that they can go to have their concerns investigated so that we can cure some of the fraudulent work and efforts by those who are attempting to just rip off the consumers. Now, I love the Consumer Financial Protection Bureau. This side of the aisle, the other side, hates the Consumer Financial Protection Bureau. When we crafted it in the Dodd-Frank reforms, it was done in such a way that they would not have to depend on the Appropriations Committee of the Congress of the United States and the House of Representatives, because we knew that there would come a time when they would be undermined. And so their appropriations come directly from the Fed. And the way that it was organized would give us some protections against, a takeover, just because a president maybe had the ability to appoint all of those who would serve on that oversight board. And so we have worked very hard over the years, and we have fought against attempts to undermine, attempts to wreck and destroy the Consumer Financial Bureau. Now here, along comes Elon Musk under the direction of the President of the United States, and they decided, because now Trump is the president, he would finally get and wreck and destroy the Consumer Financial Protection Bureau. Elon Musk went in with gangster move, and he took control and got the access to all of the records, told all of the employees to get out. I think they were ones that he said get out by 5 o'clock. Maybe it was 3 o'clock. But they were treated very badly. And I think that furniture was removed, and of course it was a lease building, and I think what they did was they tried to pay off the lease so that they could empty the office and put the police sign up. I mean, they really went after the Consumer Financial Protection Bureau. And so a lawsuit was filed by the union, I think it was the Treasury's union, and that went before the courts. And I want you to know the court looked at this and looked at the history of this, and they decided that they would replace and return the workers to the Consumer Financial Protection Bureau. Now, we know that these decisions, for the most part, are temporary, and that these issues that we have where the courts intervene and change what Elon Musk and Trump are doing in our agencies are going to have further hearings, et cetera. But for now, the courts looked at the history and all of the comments that have been made over the years and decided that they were going to return these workers. We're very pleased about that, and I want you to know that this amendment further supports the idea that consumers should have somewhere to turn when they are being ripped off. And when I sat on the conference committee of the Dodd-Frank reforms, this is one of the most significant issues that we were able to put into law. And I'm looking forward to the courts when they have the final hearings on this issue will support not only the Consumer Financial Protection Bureau as it was envisioned in the Dodd-Frank reforms, but they would do it in such a way that would have Trump And Elon must understand you stepped over the line on this. You went too far. They are in law. This is something that you can't do with your executive order. So thank you, Ms. Tlaib, for backing us up with this amendment to make sure that the Consumer Financial Protection Bureau is protected. And I yield back the balance of my time.
Gentlewoman yields back. Who seeks recognition? Is there any further debate on this amendment? Hearing none, I will yield myself 5 minutes to strike the last word. First, in the work that we've done over the last couple of years in developing stablecoin legislation in the last Congress, and in this draft, you don't see the CFPB referenced, and it was not in last Congress's draft either. And that's because the direction was that in the state-federal approach to this very narrow specific policy standard that we were going to have jointly issued rules with the federal regulators to cover payment stablecoins in consultation with the state regulators, and that would build our very strong federal minimum floor. Secondly, we wanted to make sure that the bank and non-bank alike had the same high standards. So at the federal level, that includes the bank's primary federal regulators, and for non-banks, it's the Comptroller of the Currency. The OCC, for example, obviously does consumer compliance at some of the largest banks in the country. They have a full suite of consumer compliance authorities and powers. And at the state level, as I noted in the debate on the last amendment, the state regulators have to have a regime that is stood up and certified by the U.S. Treasury Department. There is no lack of consumer protection or regulatory oversight in this bill. And indeed, not only do we have rigorous state enforcement, but we also have, as I say, backup federal enforcement. So I appreciate the gentlewoman's amendment, but I would urge that it's not needed, and therefore that it be rejected, and I yield back.
Will the gentleman yield?
I'm going to yield back. Is there further debate on the amendment? Hearing none. The question now occurs on the amendment offered by the gentlewoman from Michigan, Ms. Tlaib. All those in favor, please say aye.
Aye.
All those opposed, say nay. Nay. In the opinion of the chair, the nays have it. The nays have it, and the amendment is not adopted.
Recorded vote requested.
A recorded vote is requested by both the ranking member of the full committee and Ms. Tlaib of Michigan. Raise your hand if you wish a recorded vote. A sufficient number having raised their hand, a recorded vote is ordered pursuant to C5 of Rule 3 of the committee rules. Further proceedings on this amendment are postponed. Is there an additional amendment to Mr. Steil's amendment in the nature of a substitute?
Mr. Chairman, I have an amendment at the desk.
Ms. Williams has an amendment of the desk. We'll pause and wait for it to be distributed.
Thank you. Short and sweet.
Mr. Chairman, I reserve a point of order.
The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Ms. Williams of Georgia, designated as 31.
The amendment will be considered as if read, and the gentlewoman from Georgia is recognized for 5 minutes in support of this amendment.
Thank you, Mr. Chairman. Y'all, my number one priority in Congress is to close the racial wealth gap. And if we're going to build black wealth and an economy that works for everyone, lawmakers have to work with our partners in the financial services industries. And let me tell you, nowhere is that more important than in my home city of Atlanta, which has the largest racial wealth gap in the country. Building wealth is important to my constituents, and it's important to me too, y'all. I'm someone who went from being unbanked and living paycheck to paycheck to having the honor of representing my community in Georgia's Fighting 5th Congressional District. So this markup is kind of personal today. We need more stories like mine where people can achieve the American dream. I know that we need to embrace innovation if everyone is going to experience the promise of America. And as financial technology develops, Congress can't sit idly by and hope that the rules of the road will right themselves. Congress has a responsibility to keep up with innovators and make laws that give both industry and consumer certainty and predictability. So, y'all, we got started on that process last Congress. Former Chairman McHenry and Ranking Member Waters had productive discussions toward a bipartisan stablecoin regulatory framework. But the bill we have before us today kind of discards a lot of that progress instead of building on it. Today, we have a bill in front of us that would allow Donald Trump to issue his own stablecoin and create loopholes so that his rich buddies continue to get even richer. Unfortunately, as currently written, this legislation doesn't uplift both industry and consumers, which should always be our goal. Nonetheless, I think it's important to govern how we want to be governed. So I'm going to offer a common sense, bipartisan supported amendment. It won't completely fix all of my concerns with this legislation, but it'll make it a lot better for people back home. Even more importantly, it'll model how we should be putting together a bill as important as this. So let me break it down to you because it's really short, really simple. All the stablecoins we're regulating under this bill have to hold reserve assets for them to have value. In this bill, we spell out what kind of assets count, like coins and currency, treasury bills, and demand deposits. All my amendment says that is if those assets become tokenized or digital in the future, those assets are still eligible to back up stablecoins. This amendment is a clarification. Is good for the stablecoin industry and is good for our constituents who want us to responsibly embrace innovation. And you don't actually have to just take my word for it. My amendment matches word for word a provision of the Genius Act, a Senate stablecoin bill that got marked up on a bipartisan basis with every Senate Republican on banking, housing, and urban affairs supporting it. It's supported by industry, and this should get unanimously passed into this base bill. So I urge my colleagues to join me in legislating on a bipartisan basis and passing my amendment. I yield back, Mr. Chairman.
Who seeks recognition? Ms. Waters, ranking member of the full committee, recognized to strike the last word.
Thank you very much. I do believe that Ms. Williams has offered this amendment because there was some discussion along the way about what reserves, how the reserves are handled on the blockchain. And I would now request a colloquy with Mr. Foster to see if he dealt with this issue. As I am examining it, it seems as if not enough attention has been paid to whether or not tokenized reserves on the blockchain is somehow better than the digital reserve. Are you familiar with this?
My apologies, I just stepped into the hearing here. I don't know the context, so I'd prefer to wait.
Okay, reserving my time. Ms. Williams? I do believe that what you are describing ensures that the reserves are real and that they are can be counted on. Would you further delve into that? I would yield to you to help further explain that.
Absolutely. So every currency needs to have actual assets to back it up. And in this bill, it spells out what those assets can be: currency, coins, demand deposits, treasury bills, and more. And all my amendment says is that if these assets are digitized in the future, that they're still eligible to serve as reserves for stablecoin. And it's just a clarification to be helpful as the technology continues to develop.
I don't think it makes any difference. Thank you very much. I would urge support for Ms. Williams' amendment.
Gentlewoman yields back. The gentleman from Wisconsin, the author of the bill, Mr. Steil, you're recognized to strike the last word.
Thank you, Mr. Chairman. I'll be brief. I rise in opposition to the amendment. The amendment's unnecessary. Reserves in tokenized forms would already be captured. And so, for example, a registered money market fund that is tokenized would be a qualified reserve. So the amendment is unnecessary. I would urge my colleagues to oppose it. In brevity, I'll yield back.
Gentleman yields back. Is there any further debate on this amendment? Anybody speak in favor? Hearing none, the question now occurs on the amendment offered by the gentleman from Georgia, Ms. Williams. All those in favor, please say aye. Aye. All those opposed, shall signify by saying no. No. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted.
Vote requested.
Recorded vote is requested. All those in favor of recorded vote, please raise your hands. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the committee rules, further proceedings on this amendment are postponed. Is there an additional amendment to Mr. Steil's amendment in the nature of substitute? Mr. Lynch is recognized.
Mr. Chairman, I believe I have an amendment at the desk.
Stand by and we'll have it distributed.
Thank you so much.
Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch of Massachusetts, designated as 29.
Without objection, the amendment will be considered as read. And gentleman from Massachusetts, Mr. Lynch, is recognized for 5 minutes in support of this amendment.
Thank you so much, Mr. Chairman. Mr. Chairman, I am thankful that this most recent iteration of the bill, the Stable Act, does preclude paying interest for stablecoin issuers to pay interest on payments. So I'm thankful because that would have introduced a whole host of issues that we would have had to get into, or paying interest rather, to depositors. And so that does present a whole host of concerns if exchanges now were to be in competition with savings banks and others for resources, especially the fact that so much has to be held in reserve. In many cases, the reference denomination is the US dollar, and so those reserves would be held in dollars. This amendment would prohibit crypto exchanges or other parties affiliated with stablecoins from paying interest or yield to stablecoin holders. While this bill does not include a provision that would prevent a stablecoin issuer from paying interest or yield to a holder, it does not prevent an exchange or other party from paying attractive yields on stablecoins. We've already seen the incentive crypto exchanges offer to attract stablecoin holders. Coinbase offers a 4.1% APY to its customers holding their stablecoins at Coinbase. The exchange even pays a higher 4.5% to consumers who hold Circle's USDC. Given that Coinbase and Circle are now business partners, the companies share revenues produced by Circle's USDC, and additionally, Binance offers even higher yield of 11% on USDC. So these types of business arrangements between stablecoin issuers and exchanges are a clear example of how closely stablecoins are connected with cryptocurrencies, and it refutes the claims that stablecoins do not pay interest. This essentially makes stablecoins an investment option and not just a mechanism for payments. Additionally, I have concerns about how these types of offerings will impact credit availability, particularly for local communities. I'm skeptical of claims that stablecoins issued by non-banks will not compete with bank deposits and undermine the ability of banks to make loans to consumers and Main Street businesses. Allowing crypto exchanges to pay interest on stablecoins would create competition between non-banks and FDIC-insured banks. Non-bank issuers would also face much lower compliance costs than traditional banks, allowing them to offer significantly higher interest rates, creating an unfair playing field. When consumers put fewer deposits into banks, it leaves local banks with less credit availability and therefore less capacity to support local communities through loan programs. Also, siphoning off deposits will harm the very local and community banks, which my colleagues on the other side of the aisle have stated they would like to protect. This amendment would prevent the bill from creating unnecessary and harmful competition between non-banks and FDIC-insured banks, ultimately harming Main Street businesses. That's about it, Mr. Chairman. Thank you, and I yield back.
Gentleman yields back. Who seeks recognition?
I seek recognition. Strike the last word.
Mr. Steil.
Thank you, Mr. Chairman. Move to strike the last word. The amendment would undermine deliberately chosen language in Section 489 of the Stable Act. The restrictions carefully focused to preserve payment stablecoins as payment instruments that are backed one-to-one, not as investment instruments provided by the issuer. So to include other entities under that prohibition would be inappropriate in this bill, which is concerned with ensuring strong reserves maintained by the issuer for these payment instruments. So as you know, we're working on other digital asset legislation, including digital assets market structure, and I'd encourage my colleague to work with us on clear guidelines related to this issue as it applies to other types of entities beyond issuers. So I appreciate the amendment, but encourage my colleagues to vote no. Mr. Chairman, I yield back.
Gentleman yields back. Is there further debate on this amendment? The gentleman from California, ranking member, recognizes. Strike the last word.
Thank you very much, Mr. Chairman. I'm listening carefully to Mr. Lynch, and I'm listening from your side of the aisle, and it seems as if there's some agreement that these stablecoins should not be issuing interest, that it should be done by the exchange. Am I to conclude that basically there's some agreement? Mr. Hill?
Mr. Steil.
I wish to enter into a colloquy.
I'd be happy to.
I just said that based on what I think I just heard from you, is that there appears to be some agreement about stablecoins should not be issuing interest, and that you guys have given this some thought, and you are open to taking a closer look at this in order to make sure that it's the exchange rather than the issuer, and that you want to work further with us on this. Is that correct?
I'm definitely interested to learn more about you and your colleagues' position. I think it's important that we're preserve, as it relates to stablecoins, that we're focused to preserve the payment stablecoins as payment instruments that are backed one-to-one. But I'd be happy to engage in further dialogue, in particular as we go about completing the drafting of the market structure bill that'll be introduced for this Congress.
Thank you very much. I support this amendment by Mr. Lynch, and I yield to Mr. Lynch.
I thank the gentlelady for yielding. Yeah, we get the one-to-one backing. We get that. The last 6 or 7 stablecoins that failed all had one-to-one until they didn't. That's the whole idea. That's when they broke the buck, right? So I understand that stablecoin issuers themselves will not be able to pay interest. However, there are arrangements between issuers and exchanges like Circle and others where they have partnerships with exchanges. So what they could do, and I imagine what they will do, is they will park their stable coins at the exchange. And the exchange, under this bill, is allowed to pay interest. So that would defeat the efforts by the bank. The traditional banking community has been lobbying both the House and the Senate to get rid of that stablecoin paying interest capacity. But now it just moves to the exchange, and the exchange will pay the interest, and the exchange will compete with the traditional banks and compete for deposits. That's what I'm trying to get at with this amendment. I'm trying to get rid of that. I would like for depositors at banks to have an advantage here because their deposits are insured at traditional banks. We don't want them to begin parking their deposits at uninsured exchanges to the detriment of the lending community that services local communities. That's the idea here. It would put traditional banks, because of all the regulations that they've got to abide by, it would put them at a serious disadvantage. And it would create an advantage for the exchanges. They'd be able to pay higher interest rates for parking, stable coins at the exchange, and they would outcompete eventually that base that's located right now at our traditional banks. So it would be bad all the way around. And I yield back to the ranking
Reclaiming
member.
my time, I would simply ask for support for Mr. Lynch's amendment. It seems as if we're all thinking the same way about how we deal with this question of interest, and we have a lot of consideration as we look at our lending institutions, et cetera, about perhaps what maybe look like competition. So I ask for an aye vote on Mr. Lynch's amendment.
Who seeks recognition? Is there further debate on the amendment? Hearing none, the question now occurs on the amendment offered by Mr. Lynch of Massachusetts. All those in favor, please say aye.
Aye.
All those opposed, please say no. No. In the opinion of the chair, the noes have it, and the nays have it, and the amendment is not adopted.
Recorded vote is requested.
A recorded vote is requested. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to subchapter C5 of Rule 3 of the committee rules, a vote on this amendment is postponed. Is there further amendment to Mr. Steil's amendment in the nature of a substitute? Mr. Lynch?
Mr. Chairman, I believe I have an amendment at the desk.
Amendment at the desk. Will pause while it's distributed.
Mr. Chairman, I reserve a point of order.
Gentleman from Wisconsin reserves a point of order.
Thank you so much. Thank you.
Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch of Massachusetts, designated as 11.
The amendment will be considered as read, and I yield to my friend from Massachusetts 5 minutes in support of his amendment.
Thank you very much, Mr. Chairman. This amendment is crucial to ensuring the stability of our financial system and protecting consumers from potential harm. This amendment would require all issuers and distributors of stablecoins to be federally insured depository institutions. Without this requirement, we are opening the door to significant risks, runs on these assets, failures, and ultimately a destabilized economy. Stablecoins are functionally like bank deposits. Issuers make a promise to redeem them on a dollar-for-dollar basis whenever the consumer requests it within a certain time. As my colleagues would likely agree, products that have the same risk should be required to comply with the same regulations. Therefore, stablecoins should be regulated like deposits. Institutions insured by the FDIC benefit from critical protections such as deposit insurance, regulatory oversight, and supervisory powers that ensure our financial system stays secure. We also have procedures in place for resolving failed banks, capital requirements to safeguard the stability of these institutions, and measures to ensure that they remain safe and sound. The Biden administration's President's Working Group recommended that Congress pass legislation prohibiting persons other than federally insured depository institutions from issuing stablecoins in order to provide for supervision, prudential standards, and access to a federal safety net. The Stable Act provides a path that would incentivize most stablecoin issuers to bypass these protections, either by choosing to be uninsured state-based issuers or by selecting an uninsured OCC-chartered non-bank issuer option. This move would exclude key regulators like the FDIC, the Federal Reserve, and the NCUA from playing a meaningful role in establishing the safeguards we need for this market. Additionally, in the event of failure, the FDIC must be able to step in as a conservator or receiver. This would avoid bankruptcy proceedings for the stablecoin subsidiary as long as the FDIC determines that conservatorship or receivership for the parent bank is the best course of action. I remain deeply concerned about the risks posed by uninsured deposits in this space. Advocates for the stablecoin industry claim that these products are fully backed one-to-one and that the reserve requirements are more than sufficient. But history has shown us time and time and time again that uninsured deposits are vulnerable to systemic runs. When you tie stablecoins to volatile crypto products, that risk only increases. And when you allow stablecoin issuers to be involved in other commercial activities that invite risk, that risk multiplies exponentially. We should not forget the lessons from the failure of Silicon Valley Bank. Circle, one of the top stablecoin issuers, held a $3.3 billion deposit in uninsured deposits at the Silicon Valley Bank, representing a significant portion of USDC's total reserves. When SVB failed, USDC's value dropped below 88 cents, and it only retained its $1 peg after the federal government intervened and bailed out those uninsured depositors. If we don't act now to regulate stablecoins properly and provide a strong safety net, the risk of widespread runs on these assets becomes real. This amendment ensures that stablecoin issuers are subject to the same protections that our insured depository institutions must adhere to, It would create a regulatory framework that protects consumers, promotes financial stability, and safeguards our broader economy. We have a duty to act in a way that guarantees these assets are issued responsibly, and I urge my colleagues to support this amendment, and I yield.
Would the gentleman yield for a question?
I would.
Yeah, thank you, sir. The intent of the amendment is that it prohibits a non-bank from issuing a stablecoin. Is that fair? Because the way I read it, it says, notwithstanding any of the provision, only a sub of an insured bank may issue a stablecoin. So you prohibit non-banks.
If they acquired deposit insurance, they could do that.
Well, but we
They could
don't.
operate.
Okay, well, we don't, but non-banks aren't subject to deposit insurance. You're saying that if that regime.
That's what we wanted to do. Yeah, we want to import that regime.
I see. Okay, so you're actually arguing that all stablecoin issuers should be FDIC insured.
Correct, yeah.
Okay, I just, when you look at the actual amendment, the implication was you're prohibiting because you're amending this bill that permits both, that you're, since it's running out of time, I'll yield back to you. But I now understand your point.
Okay, thank you, Mr. Chairman.
I thank the gentleman from Massachusetts who yields back. Is there others to speak on Mr. Lynch's amendment? Hearing none, then I will call the question without objection. The amendment is, good to see. The question is now on the amendment by Mr. Lynch of Massachusetts. All those in favor, please say aye. Aye. Any opposed, say nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. Would you like a recorded vote? Gentleman asked for a recorded vote. All those in favor, please raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the Committee Rules. Further proceedings on the amendment are postponed. Is there additional amendment to the amendment in the nature of substitute? Mr. Caston, would you seeking recognition? You're back. We're back live now. Mr. Caston seeks recognition. There's an amendment at the desk, and we'll pause for it to be distributed.
Mr. Chairman, I reserve a point of order.
The gentleman from Wisconsin reserves a point of order. Thank you so much. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Caston of Illinois, designated as 38.
The amendment will be considered as read, and I now call on my friend from Illinois, Mr. Caston, for 5 minutes to explain his amendment.
Thank you, Mr. Chairman. So this amendment would address potential undisclosed financial relationships between stablecoin issuers and cryptocurrency exchanges or other financial institutions. As we know in this committee, and certainly spent enough time talking about it today, dollar-backed stablecoin issuers tend to mint and burn new stablecoins
only when institutional customers that purchase tokens in large quantities, including exchanges, fintech firms, et cetera, before they're made available to retail clients or secondary markets. We also know that's a potential risk. In 2021, a year before its collapse, Terra USD fell below its dollar peg to 90 cents. This was an algorithmic stablecoin, of course, but we found out later that it recovered thanks to a secret deal with the U.S. high-speed trading firm Jump. Jump agreed to purchase tens of millions of dollars worth of Terra to push its price back to $1, but in the terms of that deal, Jump was allowed to buy Terra and Luna at 30, 40, and 50 cents over the next 3 years, leading to more than $1 billion of profits. That is illegal. And in fact, the founder of Terra was convicted of fraud. A subsidiary of Jump was settled a fine, both of which were brought by the SEC. Yes, that was an algorithmic stablecoin, but similar market manipulation could happen with fiat-backed or other payment stablecoins, and nothing in this bill prevents that from happening again. To the contrary, I think it makes it more likely because on page 75 of this bill, it explicitly says that payment stablecoins are not securities, which would virtually guarantee that the SEC could not prosecute market manipulation by stablecoin issuers of the type that happened with Terra Luna. This amendment simply fixes that. It would require stablecoin regulators to adopt anti-deceptive practices and anti-manipulation rules that are consistent with CFTC rules required by Dodd-Frank. As you'll remember, Mr. Hill, I had offered a similar amendment during the stablecoin markup last Congress, and you had offered to work with our office on the issue under many subsequent legislation. So I'm just trying to make sure that we address this now. And I hope the text is simple enough that it can reach bipartisan amendment to make sure that we close this proverbial barn door. Thank you. I yield back.
Gentleman yields back, seeks recognition. The author of the bill, Mr. Steil, recognizes to strike the last word.
Thank you very much, Mr. Chairman. I'll be brief yet again. Appreciate my colleague's concern, appropriately focused on manipulation, fraud, deceptive practices. It's just that they're already illegal. And so this bill is unnecessary and duplicative. The underlying text provides strong regulatory and supervisory oversight to prevent these violations. So I agree with the underlying intent to prevent manipulation, fraud, deceptive practices. The good news is they're already illegal, and the underlying bill addresses the concerns the gentleman raised. So I urge my colleagues to vote no, and I'll yield back to you, Mr. Chairman.
Gentleman yields back. The gentleman from California, the ranking member of the full committee, Ms. Waters, recognizes to strike
I
the
move to
last
strike the last word.
You're recognized.
This amendment would incorporate strong anti-manipulation language to this bill. Market manipulation in the crypto ecosystem remains a significant concern for many of us. We've seen time and time again how bad actors engage in schemes that impact the value of stablecoins and can lead to what is known as depegging. I hope Republicans will honor their commitments from last Congress to Mr. Caston by accepting this amendment. I appreciate the statement that was just made about, oh, this is already taken care of in the underlying bill. That's not good enough. As a matter of fact, if it's synonymous, what's in the underlying bill, then it certainly would cause no harm. It would just reinforce. And so I would expect that the opposite side of the aisle here could simply show some degree of cooperation on an issue such as this that really does no harm, but rather enforces the fact that we're all concerned about manipulation. I would ask for an aye vote on the amendment. I yield back.
Gentlewoman yields back. Is there further discussion on the amendment? I'll recognize myself for 5 minutes just to reiterate that I agree with Chairman Steil on this fundamental practice is certainly embedded in federal law in the oversight of this act. But I also acknowledge and recall our discussion last year as we discussed FIT 21 and stablecoins in that committee markup, that we'll take this language, certainly work with you on it as we think about the bill text, and also take it into account as we think about drafting the Fit 21 2.0 bill, which this committee will consider in the next few weeks. And so we will continue to work with my friend from Illinois, but I do urge our colleagues today to reject the amendment as it is today, and I yield back.
Mr. Chairman?
Yes, Mr. Lynch, strike the last word.
I rise in support of Mr. Caston's amendment, and I yield my time to Mr. Caston.
Yep.
Thank you, Mr. Lynch. I want to just quickly comment on my friend Mr. Steil's comment. It's fine to say something's illegal, but saying that something's illegal while you fire the sheriff it creates an enforcement problem. And there's a lot of things that happen in the crypto ecosystem that are illegal. You know, having the broker and the dealer and the exchange all being the same people issuing tokens, wash trade, and that all that's illegal. But if we're not beefing up the enforcement agency, then we are not actually making it less likely to do that crime. And of course, some of the challenge with crypto is that these transactions are so fast and so immediate and so easy to hide the paper trail that we are inviting more crime. The analogy that I would use is I would encourage everybody, for a whole lot of reasons, go rent Beverly Hills Cop. German bearer bonds as a tool to facilitate money laundering is illegal. The Beverly Hills Police Department knew it was illegal, but they didn't have the enforcement arms to go through and prosecute that crime until they drew on some resources from the Detroit Police Department, who sent out a young man to come out and help them crack that case. What we find here is a situation where we're saying, right now the Beverly Hills Police Department has jurisdiction over this, that being the SEC. We're going to say this stuff is illegal, but I'm going to move this all to the jurisdiction of the town I live in, Downers Grove Police Department, much smaller town. Good police officers, don't get me wrong, they're good friends, but they don't have the resources. When we're taking this out and we're saying we're not going to use the SEC, but we're going to move this into the CFTC that's maybe a tenth the manpower of the SEC, saying that it's illegal while you're simultaneously getting rid of the police department is not a way to limit crime. So if we care about this stuff, if we don't want these markets to be manipulated, then let's include this amendment, and I hope that at some point we can also make sure that we beef up the number of Axel Foleys out there that can go and shut down this crime. Thank you, and I yield back to Mr. Lynch.
Gentleman yields back to Mr. Lynch.
If there are no other members that need time, I will yield back to the chair. Thank you.
I'm a sucker for an Eddie Murphy analogy, so I thank the gentleman from Illinois. Is there further discussion on Mr. Caston's amendment? The gentleman from Wisconsin.
I move to strike the last word.
Gentleman recognized.
Many of the benefits of
Hold on,
blockchain.
You've already spoken. The gentleman from Ohio.
Move to strike the last word.
Gentleman's recognized.
I yield to the gentleman from Wisconsin. Well, as fitting as the analogy is, and a good one, as Mr. Stiles pointed out, it is already illegal. There are cops on the beat, and frankly, far more responsible than where Gary Gensler was basically just putting everyone in jail that he didn't like. I yield back.
Gentleman from Ohio yields back. Is there someone seeking recognition on the Caston amendment? If there's no further debate, the question now occurs on the amendment offered by the gentleman from Illinois. All those in favor, please say aye. Aye. All those opposed to say nay. Nay. Opinion of the chair, the nays have it. The nays have it, and the amendment is not adopted. The gentleman requests a recorded vote. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, action on this amendment is postponed. Is there an additional amendment to Mr. Stiles' amendment in nature of substitute? Mr. Caston? We'll pause for its reporting.
The chair is calling for you to visit there.
Oh.
Mr. Chairman, I reserve a point of order.
The gentleman reserves a point of order. The clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392 offered by Mr. Caston of Illinois, designated as 35.
Without objection, the amendment will be considered as read. And my good friend from Illinois, Mr. Caston, is recognized for 5 minutes in support of his amendment.
Thank you, Mr. Hill. So this amendment would require stablecoin issuers with more than $1 billion in assets to prepare an annual financial statement, undergo a formal audit by an independent public accountant, and submit such statements and audits to applicable federal or state regulators. This is comparable to audit requirements for FDIC-insured financial institutions. Now, currently, under this bill, stablecoin issuers would have to prepare monthly reserve reports that are examined, that's the term of art in the bill, by an accounting firm registered with the PCAOB. Examined is not the same as an audit, and it's worth talking about this distinction. Stablecoin issuers have issued and continue to issue reserve reports. That's to demonstrate that they have sufficient collateral to back the total number of stablecoins in circulation. But these reserve reports only represent a snapshot of an issuer's balance sheet at a particular moment in time. The analog I'd make to all my colleagues here, because it's the beginning of a new quarter, which means that all of us were probably spending some part of the last few weeks going out and trying to raise as much money as we could into our campaign accounts. And we all did the thing that we all do where we defer making payments because we want to show as much cash on hand at the end of the quarter. That's fine. You also wouldn't catch that in the absence of an audit that's going through and looking at what your actual practices are that you're using. An audit is a different beast because those examinations don't review the underlying data to confirm whether the issuer's claims about its reserves are materially accurate. They don't express an opinion about the adequacy of reserves or financial stability. They don't measure the effectiveness of a stablecoin issuer's internal controls or governance. All that stuff is captured in an audit. And PCAOB has in fact recently warned investors to exercise extreme caution, their words, when relying on reserve reports. Their 2023 advisory said that reserve reports, quote, do not provide any meaningful assurance to investors or the public. And the SEC and PCAOB have pointed out that there are no specific requirements for the terms of these examination engagements. Again, there's a big difference from an auditor. You hire a GAAP auditor, they are going to set the terms. In these cases, the stablecoin issuer is setting those terms. So even if you have the same auditor in two different firms, they may be given different terms and have very different definitions. So it's clear that reserve reports, even with examination, can be unreliable. That is not to suggest that reserve reports aren't valuable. They just are incomplete in the absence of a full audit. So what we're trying to do is, if we're going to make sure that stablecoins are in fact stable, that we staple these examination requirements to a proper complementary audit. In the spirit of bank-like activities, bank-like regulation, I'm hopeful that all my colleagues will support this amendment to put stablecoin issuers and FDIC-insured financial institutions on the same level playing field. Thank you, and I yield back.
Gentleman yields back. Mr. Steil, author of Stable Act, is recognized. Oh, do you continue to reserve your point of order?
I waive my point of order and move to strike the last word.
The gentleman's recognized for 5 minutes.
I appreciate it, Mr. Chairman. I appreciate my colleague's amendment. It brings up an important topic. The Senate bill, our counterpart to the Genius bill, has a similar type framework. They have a $50 billion threshold. The amendment as proposed is a $1 billion threshold for these audit requirements for issuers. I think it's really important to tailor the regulatory burden to the size and scope of the entity. And so open to working with my colleague as we work to take this bill from the committee to the floor. However, I'd urge my colleagues to oppose the bill in its current form, or the amendment in its current form, for the fact that the threshold put forward is too low and onerous. So I appreciate the intent in which it was offered. I'd be happy to continue to work with my colleague from Illinois on the topic. He brings up an important point, an important topic, something I'm willing to work on, but I'd urge my colleagues to vote no on the amendment before us.
Would the gentleman yield just for a quick response?
I will yield.
So I think there's a structural issue of, are these going to be regulated essentially as deposit-taking institutions that are earning interest on the money and are able to play with that money or not? The $1 billion threshold is to tie this to the FDIC rules because we don't want to create an arbitrage opportunity in between. We got plenty of examples with Tether specifically, right, where they're taking deposits, they're loaning those out. Nobody's got any clarity about what the heck is inside Tether. They've never provided an appropriate audit. And if we're going to maintain a structure within the overall piece of this bill where stablecoins are not at the end of the day very stable and very boring, then we need to make sure that we've got thresholds that are no different from what we have inside banks where they're hypothecating assets, they're loaning them out, there's less liquidity in there. So I think as it sits right now, given where some of the other amendments sit, we should make sure that this aligns with the FDIC rules. Maybe there's another scenario, but that would require a lot more surgery to this bill to get to a point where we aren't just creating an arbitrage opportunity for anyone between $1 and $49 billion.
I'll reclaim my time. I appreciate the concern. I think directionally, I'm aligned with what you're generally trying to do. I would note that there's significant differences here because these aren't deposits that are being rehypothecated. We're not talking about banks. We're talking about stablecoins in the context of a payment tool. And so while I appreciate the intent in which the amendment is over, I don't think that analogy is an exact correlation to the issue that we're addressing. Again, to the core concept of tailoring the regulatory burden to the size and scope of the entity. I am of the view that the threshold is offered by my colleague is too low. Again, I note the Genius Act on the Senate side has a similar structure as it approaches about $50 billion. Again, open to continuing this dialogue as this bill moves into final form, enters the floor, or goes forward. I will yield to the chairman of the full committee, Mr. Hill.
I just want to thank the two of you for your discussion of this. I think setting solid audit standards in this regard are merited, and I hope that you guys would work together on the style of those audits and a dollar amount. I understand my friend from Illinois why he's suggested the amount, and look forward to working with you on that, and thank you for the colloquy.
Mr. Chairman?
It's my time. I'd be happy. No,
I thought you were done. I'm sorry.
No, I yield back to the chair.
Gentleman yields back. Who seeks recognition?
Mr. Chairman?
The gentleman from Massachusetts, Mr. Lynch, recognizes the strike the last word.
That's a interesting, first of all, I want to support Mr. Caston's amendment. I think audits are absolutely necessary given the opaqueness of some of these systems. What I worry about as well is that as a stablecoin issuer decides what architecture to use, if they choose a public permissionless blockchain, it will be, first of all, it's impossible to figure out who is behind each node because those are in many cases anonymous. They're often bad actors. So you question whether the efficacy of an audit, whether it's adopted within the bill, will be possible. Because, and this goes to another amendment that I have, but right now, an issuer could just establish a public permissionless blockchain where we don't know who these people are, and there's no requirement for them to cooperate with an audit and to get at what's behind the reserves and who the parties are. So I certainly support the idea of an audit. I just without a requirement that it be a permissioned blockchain where people actually know who each node is, and there are legal recourses against those individual node operators if they don't cooperate in a lawful way, in a legal way. It could be, there could be recourse there. So just want, I do support the ongoing discussion between the chairman of the committee and Mr. Caston, but I do want to point out some of the other operational difficulties that might exist beyond that, beyond the fact of the audit itself. And unless Mr. Caston needs my time, yeah, I'll yield my additional time to Mr. Caston.
Thank you, Mr. Lynch. I just want to raise just one point about this size threshold. Let us presume for a moment that somebody says, I'm a $49 billion asset under management stablecoin, therefore I'm not subject to compliance. How do you know that? Well, because I brought in somebody to examine my reserves who, subject to my own rules, said it was $49 billion. Was it audited? No, I wasn't required to. The $49 billion is a lot of money, right? So we have an unaudited number, and now what happens if that entity is sitting there saying, well, my reserves are actually not what they claim to be? All of a sudden, there's a run on that stable coin, and that very quickly leads to contagion and wherever their other banks are and how you get this through. It seems to me that asking a $1 billion institution, which is not, this is not a tiny institution that can't afford to hire an auditor, right? Much less a $49 billion institution to say, get an auditor to say that if you're going to tell us the size of your operation, then we'll make a decision. I don't know how we would ever trust somebody says, I'm less than 50 billion and just trust me because I set the rules of my own valuation metrics. So I don't think this should be super complicated.
Will the gentleman yield?
I yield back to.
Of course, yeah.
I would note just for the record, the bill has monthly attestation requirements to be certified by a CPA. So I think it'd be maybe misleading to say that there's no requirement. Then the question is, how do we scale the regulatory burden to the size and scope? Again, more than willing to work with my colleague as to what is the appropriate size and scope. We could dialogue that. I'm of the personal view that the threshold offered by my colleague is too low, but I think it would be an inaccurate statement to say that there's no requirement. The requirement is simply scaled. So it'd be a monthly attestation requirement to be certified by a CPA, a lower standard than an audit, as noted. That's correct. But the threshold for the audit as suggested by my colleague, to me, is too low. I'm encouraging people to vote no, but I am very open to engaging in an analysis and a dialogue with my colleague to find that appropriate threshold. And again, I note, just for sake of comparison, our colleagues in the Senate found 50 billion to be an appropriate number. So look forward to the conversation working with my colleagues, and I'll yield back to you, Mr. Lynch.
Yeah, thank you. Perhaps our colleagues in the Senate were anticipating Meta or somebody coming in big there. That's why they put the 50 billion mark on that. But again, Mr. Caston, do you need more time? Okay, then I yield back, Mr. Chairman. Thank you.
Gentleman from Massachusetts yields back. Who seeks recognition? Appreciate that discussion. If there's no further debate, the question now occurs on the amendment offered by Mr. Caston from Illinois. All those in favor, please say aye. You want to say aye now?
Aye.
Those who oppose the amendment say nay. Nay. Independent chair, the nays have it. Nays have it. The amendment is not agreed to.
Request a recorded vote.
The gentleman from Illinois requests a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the committee rules. Further proceedings are postponed. Is there an additional amendment to Mr. Steil's A&S?
Mr. Chairman.
Gentleman from Massachusetts.
Thank you, Mr. Chairman. Mr. Chairman, I have an amendment at the desk.
We'll pause and have it distributed.
Thank
By
you.
the way, the amendment standard in gap is 5 minutes.
Mr. Chairman, I would like to reserve a point of order.
I'm from Wisconsin, reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch of Massachusetts, designated as 28.
Without objection, the amendment will be considered as read, and Mr. Lynch is recognized for 5 minutes to explain his amendment.
Thank you, Mr. Chairman. This amendment would simply require stablecoin issuers to issue their products on permissioned blockchains. Just to elaborate a little bit, permissionless public blockchains, which some of them use, many of them use, are databases that are hosted on multiple different computer servers, each of which is known as a node. Instead of having one centralized entity host and maintain the database, each node runs software that allows it to host a version of the database. Permissionless means that any computer running the necessary software can become a node. There's no identification or vetting involved, which is a problem. Transactions are carried out by updating the database, but because it's quite plausible that a node could be a bad actor, nodes need to be discouraged from approving problematic transactions like double spending or transferring assets to themselves. Public permissionless blockchains rely on game theory-based consensus mechanisms like proof of work or proof of stake to discourage such behavior. So, Mr. Chairman, this amendment would require stablecoin users to issue their products on permissioned blockchains. Stablecoins are built on permissionless blockchains technology right now, meaning anyone with the right software can join the network and become part of that blockchain. This open access structure, while innovative, also comes with very serious risks. The lack of identification and vetting of participants creates a dangerous avenue for illicit activities like money laundering and sanctions evasions. These blockchains do not operate in a vacuum. They require constant vigilance and maintenance to safeguard against security flaws that could compromise the entire system. In light of these vulnerabilities, permissionless blockchains should not be the foundation for any financial services, especially one as critical as stablecoins. We need to move toward permissioned or private distributed ledgers for these types of transactions, and by using a permissioned blockchain, we can ensure that the entities involved are accountable, they're identifiable, and subject to regulation and oversight that is essential to maintain the integrity of our financial system. With that, Mr. Chairman, I yield back.
Gentleman yields back. Who seeks recognition?
Mr. Chairman, I waive my point of order and seek to strike the last word.
Gentleman's recognized for 5 minutes.
Many of the benefits of blockchain, including kind of the resilience, the openness, resistance to falsification, don't apply in the same way, to the same extent in permissioned systems. And so by forcing a choice of blockchain, you're not only taking away the decision from innovators and consumers, but also limiting blockchain future development as open public ledgers. So it really goes at the core of the bill. Indeed, one of the primary value propositions associated with blockchain technology is that it's transparent and open source. Anyone with an internet connection can view and audit the digital ledger of transactions. So if the Stable Act were to require permissioned blockchains, this transparency and accessibility would actually be lost. So Congress shouldn't be in the business of picking winners and losers in technological innovation. And I think we want to remain technology neutral. Moreover, legally mandating permission blockchains locks out other innovations, including decentralized, transparent, and open solutions. Technology, it's evolving quickly. As we know, it requires specific design in law, specific design in law ages poorly and reduces flexibility. So nothing in the Stable Act prevents a payment stablecoin issuer from issuing their assets on a permissioned blockchain. That's still available. If the market decides that permissioned blockchains are more desirable than permissionless blockchains, the bill allows for it, gives it that flexibility. However, Section 5A3BI2 does not let regulators deny applications because stablecoins are issued on an open, public, and decentralized network. And so I think at its core, I disagree with my colleague's approach here. I think at its core, we want to let the market decide what type of blockchain payment stablecoins, what type of blockchains, payment stablecoins should be issued on. And so I don't think you want the heavy-handed approach that I think my colleague's amendment would bring. I think it would stifle innovation. And accordingly, I'm going to urge my colleagues to vote no on my colleague's amendment. And Mr. Chairman, I'll yield back.
Gentleman yields back. Who seeks recognition? If there's no further debate, the question now occurs on the amendment by the gentleman from Massachusetts. All those in favor, please say aye. All those who are opposed, say nay. Nay. Pending the chair, the nays have it. Nays have it. The amendment is not adopted. Okay. Is there additional amendment?
Yes, please. Recorded vote, please.
The largesse of the chair will permit that.
Thank you. I appreciate it, Curtis.
Recorded votes requested. All those in favor, raise your hands. System number have raised their hands. Recorded votes. So order pursuant to subsection C 5 of Rule through the committee rules. Further proceedings are postponed. Is there a further amendment? Mr. Caston.
An amendment at the desk.
Amendment at the desk. We'll pause for bid to distribute.
Mr. Chairman, I reserve a point of order.
Mr. Steil reserves a point of order. Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Caston of Illinois, designated as 39.
We will consider the text as read, and I would now yield to my friend from Illinois for 5 minutes to explain his amendment.
Thank you, Mr. Hill. So this amendment, when we drafted it last night, and then I got in here as we're bouncing in and out, and I was listening to your exchange with Mr. Foster, and I was thinking I didn't do my homework properly. But I think this amendment is still necessary, and I'm hoping in the exchange we're both in agreement on it. This amendment would limit bank deposits that are eligible as collateral for stablecoins only to those that are insured. This is to protect stablecoin holders' funds during times of market stress and mitigate financial stability risks that a potential run on a stablecoin could cause. Under the current text of the Stable Act, stablecoin issuers would be permitted to invest in assets that are not particularly safe, including uninsured bank deposits. Specifically, page 14, line 16, bill says, quote, funds held as demand deposits at insured depository institutions are eligible to act as collateral, but doesn't state that those deposits have to be insured, meaning that uninsured deposits are also allowed. Now, in a prior draft of this that was posted on the Republican Committee's website on February 6th, it did actually say insured demand deposit, so I don't know if that was an oversight or a strikeout, but I'm hoping that we can get that back in, which would seem consistent with the spirit of the colloquy that you had with Mr. Foster earlier. Stablecoin reserves in the form of uninsured deposits, we know, can create systemic risks because of the panic that occurred when Silicon Valley Bank failed. At the time of that failure, as we discussed earlier in this hearing, Circle held $3.3 billion of uninsured deposits at SVB, which represent a large portion of USDC's total reserves. The value of USDC dropped to 88 cents after they failed, bounced back only after they were bailed out. So we are in a world right now, if we keep the text of the Stable Act as written, where USDC is only considered to be stable because the taxpayers bailed it out, and I don't think any of us want to continue that definition of a quote-unquote stablecoin. Now, the Republican witness at the hearing for this a month or so ago only mentioned algorithmic stablecoins as a risk, but I just want to stress that that is disingenuous. There was a 2023 Bank of International Settlement study of 60 stablecoins, including prominent ones like Circle and Tether, and they found that they had all lost their price peg at least once. That's the opposite of stable. Every single one of them had lost their price peg. Now, that is because when investors have doubts about these reserves, they move to quickly redeem the tokens. That can create runs that collapse the price of the stablecoin and cause market contagion. FSOC has called attention to these run risks, warning that, quote, stablecoins continue to represent a potential risk to financial stability because they are acutely vulnerable to runs. Former Treasury Undersecretary for Domestic Finance, Nellie Lang, recently said, quote, for stablecoins to function and not cause or pose risks to financial stability, reserve assets have to be very safe and very liquid. There's a second problem that is also currently in the Stable Act, but it's the exact same problem. The Stable Act also says that stablecoin reserves can include Eurodollars, which are US dollar denominated deposits held at foreign banks. Page 21, lines 18 through 21, directs federal and state payment stablecoin regulators to establish requirements regarding approval for foreign depository institutions to hold deposits as collateral. There is nothing in that section that requires those deposits to be insured. And as we know, the Eurodollar market generally is not insured. It's estimated to have total outstanding value of about 13 trillion with a T dollars. Last year, former SEC Chair Gary Gensler warned that much of that 13 trillion is in U.S. currency held offshore by U.S. banks is in fact uninsured. He'd emphasized that Eurodollar markets have played a role in deepening economic downturns across the globe, including the 2008 financial crisis. So if we can agree, as I think the colloquy with Mr. Foster and Mr. Hill played out, that we need to make sure that that cash assets underlying stablecoins are insured, then FDIC deposit insurance plays an important role in promoting financial stability. And we also need to make sure that a run on U.S. dollar denominated deposits at global banks is not possible. Federal government has incurred significant costs in rescuing uninsured depositors during financial crises many times, 1980, 1992, 2007, 2009, 2023. This bill would invite future taxpayer bailouts, and I don't think any of us want to say that we were here, we were warned, and we chose not to act. So I hope we'll heed these warnings from our regulators, apply these lessons, and just make sure that cash deposits that are used as reserves for stablecoins are in every case insured. Thank you, and I yield back.
Gentleman yields back. Who seeks recognition? Gentleman from Wisconsin.
I'll also waive my point of order.
Gentleman waives his point of order. He's
Move
recognized
to
to
strike the last word. Thank you, Mr. Chairman. This is really taking us back to the previous discussion with Dr. Foster. So Section 4A of the Stable Act includes the following as permissible reserve assets. I think it's just let's stage set here. So demand deposits or other deposits that may be withdrawn at any time, held at insured depository institutions subject to limitations established by the FDIC and CUA, respectively, to address safety and soundness risks of such insured depository institutions. So this means that for insurers holding deposits that exceed the deposit insurance limits, they'll be subject to rigorous requirements. So let's think about that. First, the FDIC and the NCUA determine how much in uninsured deposits they're able to hold to help avoid uninsured deposit concentration risk. Second, issuers face reserve asset diversification requirements under the joint federal rulemaking. So this would include requirements covering the amount of deposits an insurer is able to have at a single depository institution. And then third, insured depository institutions already have deposit concentration risk requirements that limit how many deposits they're allowed to hold from a single customer. So if we establish that issuers were only able to hold insured deposits, they'd have to do so with the help of a deposit sweep network, resulting in frictions to redemptions that could actually leave consumers worse off. And so furthermore, my colleagues struck the ability of insurers to hold their reserves at foreign depository institutions. One of the benefits of stablecoins is their ability to be used abroad to process global payments. Section 4 of the Stable Act gives our regulators the ability to jointly determine which jurisdiction or institutions would be appropriate for issuers. So this amendment, in summary, is unnecessary and impedes the payment stablecoin ecosystem from reaching its full potential. So I would urge my colleagues to oppose the amendment as drafted, and Mr. Chairman, I will yield back.
Gentleman yields back. Who seeks recognition?
Yeah.
Mr. Foster of Illinois.
Yeah, and just like to, this point about.
Recognize and strike the last word.
Yeah, strike the last word. Just in response to the gentleman's discussion previously, it doesn't seem like a bad thing for the consumer if these things are put into sweeps that spread the stablecoin reserves into multiple insured accounts. It seems it's regularly done. It is very inexpensive, and it means that you're not going to have one stablecoin that will be shakier than another one, and will presumably trade differently than those, or behave differently under stress. It's a well exercised model to do that, and I don't see what's the objection to it. There'll be a small fee associated with it. It will make the issuer slightly less profitable, but it seems like that is a very small risk compared to having unlimited numbers of uninsured deposits. I'd be happy to yield.
I'll take the moment there. I think what we're looking at is the resulting friction to redemptions that would exist. And I think the second point is the underlying amendment struck the ability of insurers to hold reserves at foreign depository institutions. And again, one of the core concepts of this is people's ability to use a U.S. dollar-backed stablecoin on a global basis. And so there's layers of risk management in the underlying text of the bill. So I wouldn't want to walk away and say that there's none if we don't take this. There's a robust layer of risk management, kind of as laid out by me, from the FDIC, NCUA, reserve asset diversification, insured depository institutions have deposit concentration risk requirements. And so there's layers of risk avoidance in the underlying bill. I just don't think that the layer that's being offered in the underlying amendment outweighs the burden it places in the friction that it would pose in the system. Yield back.
No, I understand, but I think, the friction is going to be a very small impact on the overall profitability of the issuer, and so that doesn't seem to be a major objection to this. I should mention, I'm going to be offering a simpler version of this that simply, we've had some confusion here in this hearing. The chair has said, I believe repeatedly, that only insured demand deposits are accessible. So I'm going to have a similar amendment that will just insert the word insured where relevant. And that should clarify whether or not only insured deposits are here. Anyway, that was my comment. Yield. And, can I yield to Representative Caston?
Thank you, Dr. Foster. I just want to point out that if, in fact, there's already all sorts of belts and suspenders in here, it does raise the question of why the February 6th draft was modified, because the February 6th draft that we were first reviewing said insured demand deposit. So there was a decision made by the Republicans here to take that out, and we're now arguing that what's there directing the executive branch to fix this is going to cover that. I would argue in this Loper-Bright era, we should be clear about our intent, not count on the regulators to figure out what we meant. And if I was a bank who was trying to take advantage of this, I'd say, well, they had that language and they didn't put it in there, so clearly that wasn't Congress's intent. Put the language back in. And with respect to Eurodollars, look, I get it. We could make lots of parts of our financial system much bigger, much faster if we took off the brakes. That in and of itself is not valuable. Why would we say that these are stable if we are going to allow the cash that we are depositing to be in a place where we don't know if it's there when we need it? An uninsured deposit in a U.S. bank is no different from an uninsured deposit in a European bank. If it ain't there, it ain't there. And therefore, it's not stable. And again, we learned this lesson with SVB on this committee. Most of us in this room were here. Most of us remember that point where, I think it was the weekend, we all got pulled over on the side of the road talking to the FDIC and the Treasury saying, holy smokes, this bank is melting down. We have to inject a bunch of money into it. What did we learn from that? If what we learned from that is let's do it again, it's a mistake. This seems like common sense. Yield back to Mr. Foster.
And I yield back.
Gentleman yields back. Who seeks recognition? Mr. Lynch.
And I certainly support Mr. Caston's amendment. I think it's common sense, and it could avoid much of the damage that we expect if one of these stable coins breaks the buck. However, there's also another part of this, which is that the underlying legislation also permits the merger of banking and finance. Banking and commerce. It basically is unlimited as to what other businesses a stablecoin issuer might engage in. And, for a very, very long time in this country, that was something that Congress was very careful about and very protective of depositors and protective of the integrity of our financial system. And that's going away in this bill. That's going away. We're blowing it up so that someone who actually is creating currency out of thin air can also engage in any level or extent of commercial activity, including the biggest players, including Meta and Amazon and X and everybody else. So it really, we're looking at the likelihood that some source of volatility will cause these one or more of these stable coins to break the buck. I think that's automatic. That's going to happen. And so I think what Mr. Caston is wisely trying to do is to limit the damage that might be caused, or the likelihood that one of those unpegging event occurs. So I appreciate his thoughtfulness on this, and I hope members will support his amendment. I yield back.
Gentleman yields back. Who seeks recognition? If there's no further debate, question now occurs on the amendment offered by the gentleman from Illinois. All those in favor, please say aye.
Aye.
Any opposed, say nay. Nay. Opinion of the nays have it. The nays have it. The amendment is not agreed to.
Request a recorded vote?
Recorded vote is requested. All those in favor of recorded vote, raise your hands. Sufficient number having raised their hands, recorded vote is so ordered. Pursuant to Section C5 of Rule 3, the committee rules for proceedings are postponed. Is there further amendment? Mr. Liccardo, recognized.
Thank you, Mr. Chair. There's an amendment at the desk.
We'll pause and let the amendment be distributed.
Thank you. It's the one numbered 010. Thank you.
Internet's so weird.
This is
Mr. Chairman, I reserve a point of order.
I think we've passed out the wrong amendment.
okay.
You gave me a Foster amendment, not a Liccardo amendment.
Criminal penalties?
We'll just.
Yep. No, this is the right one. If it's criminal penalties. Huh?
Yeah.
Criminal penalties?
Yeah. No, like that.
They're playing games.
Yeah, Liccardo. Yeah. This is Liccardo in Section 3.
Should be 010.
Got it, yeah. I'm here till midnight. Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Liccardo of California, designated as 1010.
Without objection, the amendment will be considered as read, and the gentleman from California is recognized to explain his amendment.
Thank you, Mr. Chair. Currently, this draft of the bill contains no criminal sanction for the unpermitted issuance of a stable coin, and the current provisions for civil penalties would penalize a violation for up to $100,000 per day. That's under Section 3B3. Obviously, there is concern with regard to this Section 3 around extraterritorial enforcement. The largest stablecoin company in the world is headquartered in El Salvador. And to my knowledge, I don't believe El Salvador is the beacon for sound financial management globally. We should be concerned about this, as well as other companies elsewhere in the world. There are criminal penalties in other parts of this bill. Specifically in Section 4, it criminalizes submission of information that doesn't fairly present financial status for monthly certification by a CEO or CFO, Section 4 also criminalizes misrepresentation of FDIC insured status. So there are criminal penalties here, but not for this particular violation, which is the unpermitted issuance of stablecoin. Now, the Senate version does contain this language that would impose criminal penalties for unlicensed issuance. It is a particular concern to me because as we think about what the civil penalties are, up to $100,000 per day, and you consider just the profit last year made by that one company headquartered in El Salvador, Tether, $13 billion last year, $6 billion in the fourth quarter alone. So if Tether wished to operate in an unpermitted state, it could do so at a cost of $9 million for a quarter, in which it earned $6 billion profit. Let me be clear about that. That was profit, not revenue, but net revenue, profit. So to take Mr. Kasten's Beverly Hills Cop analogy one step further, if the civil penalty for moving some billions of dollars of German bearer bonds with a $6 billion profit was only a $9 million civil penalty, I think most crooks would take that risk. Certainly not suggesting that's the case with this company, that they're in any way crooked or they're intending to be unpermitted. The point is there is a great temptation for anyone to operate well beyond the bounds of the law. And so I would like to see some more significant penalty imposed here if we're going to ensure that everyone's operating lawfully. Now, I guess through Mr. Chairman, I know that Mr. Steil and I have had some conversations, and I'd certainly welcome colloquy. I have been informed that there may be some consideration around penalties, and I'd certainly welcome Mr. Steil's.
Will the gentleman yield?
Yes.
First, appreciate your engagement on this bill. It's been constructive and have enjoyed working with you on the drafting. Would further commit to working with you as we look at the penalties in this section. You're correct. There are criminal penalties in Section 4. It's currently drafted not in Section 3. We want to make sure we right-size the penalties to hold bad actors accountable, and very open to further dialogue as it relates to Section 3. And so with that commitment, I would ask if the gentleman would be willing to withdraw his amendment as we work to further refine the bill in this section in particular prior to floor action.
Mr. Chair. Yes, I would be willing to withdraw. I certainly can see where the votes have been going. I would also suggest, I think, in negotiation with the Senate, should this pass, as I expect it will in the House, there'll be an opportunity for us to revisit this.
I appreciate that and look forward to continuing to working with my good friend from California.
I'll ask for unanimous consent, then withdraw.
The gentleman's amendment is withdrawn. I appreciate the colloquy and the willingness to work together on this important proposal, and I thank the gentleman from California for it. Is there further amendment?
Good.
Mr. Foster is recognized.
This is for a new amendment?
The one that was previously passed
I
out.
have an amendment at the desk, yes.
It's at the desk. We'll pause for, I think it's been distributed. May I ask the clerk, no? Yeah, that's what I've got. Yeah. Okay, got it. Pause while the clerk distributes Dr. Foster's amendment.
Mr. Chairman, I'd like to reserve a point of order.
Gentleman from Wisconsin reserves a point of order. The clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Foster of Illinois, designated as 22.
I thank the clerk. The amendment will be considered as read, and I now call on the gentleman from Illinois, Dr. Foster, to explain his amendment.
Yeah, very briefly, my amendment is simply sort of a stripped-down version of Rep. Caston's previous amendment, just to clarify whether the intention here is that uninsured deposits be allowable or only insured deposits. And so my amendment simply inserts the word insured 4 places on the last paragraph on page 14, and as indicated. And so that's pretty much it, and I think it'd be very valuable. If you're willing to accept this amendment, then what the chair's indication that only insured deposits will go through. Otherwise, I think a recorded vote will be useful to get the committee on record as to what our intent is here.
Well, I appreciate the gentleman. And I just would, I said to Mr. Caston, I would say to my friend, if he'll yield to me, that, we'd love for our staffs to work with you on this section and make sure everyone on both sides of the aisle fully understands how the banking industry has recommended that this be done for safety and soundness purposes, and make sure you understand the existing authorities in the draft about the limitations that the bank regulators are going to impose as well. So I'm not asking you to withdraw the amendment, but I am explaining to you that I think we ought to have some conversation about it. I'm happy to put it up for a vote again, but I think that would be helpful to you and Mr. Caston as well. But
Yeah, so,
I'll yield back to him.
yeah, thank you. And yeah, I guess at this point, well, let's proceed, but I intend to put it up for a vote. It'll just be useful to have everyone on record here.
Yep. The gentleman yields back. Who seeks recognition? If there's no further debate, then the question now occurs on the amendment offered by Dr. Foster. All those in favor, please say aye.
Aye.
Those opposed, please say nay. Nay. In the event chair, the nays have it. The nays have it. The amendment is not adopted.
Request recorded vote.
Recorded vote is requested. All those in favor of recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is so ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. Is there further amendment? Hearing no further amendments, the question now occurs on ordering the bill as amended, reporting to the House with a favorable recommendation. Those in,
Mr. Chairman?
I've asked twice, but I'll now yield to the gentleman.
We're
if you
waiting
have an
for a
amendment.
vote. I don't know, it just went radio silent there. I didn't understand what you were talking about.
I was looking for something, but we didn't go radio silent. I asked if there was any more amendments, and I didn't hear
Yeah,
anybody
I
say
have-
anything.
Yeah,
Okay.
I do, yeah. Thank you.
Gentleman's recognized for 5 minutes. Or,
Mr.
I
Chairman,
beg your
believe
pardon,
I
you've
have
got an amendment at the desk.
At the desk, yep.
Wait for the clerk to report it.
Thank you.
Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch of Massachusetts, designated as 20.
Without objection, the amendment will be considered as read. Gentleman from Massachusetts recognized to explain his amendment.
Thank you, Mr. Chairman. This amendment would prohibit all foreign-issued stable coins from being offered or utilized in the U.S. absent authorization. To safeguard the integrity of our financial system, we must ensure that foreign actors are not able to bypass U.S. regulations and potentially compromise our economic stability. Many of my colleagues also share the concern that if this bill were to become law, there is little to prevent large foreign issuers such as Tether from continuing to operate outside U.S. law, playing by its own rules and undermining the very regulatory framework that we're trying to establish here tonight. I also have grave concerns that this bill might incentivize U.S.-based stablecoin issuers to relocate overseas simply to continue offering their products to American consumers from abroad. This would defeat the very purpose of this bill. Additionally, Tether has repeatedly been at the center of reports linking it to illicit activities, including being a preferred financing method for terrorist organizations and sanctions evaders. This is not a risk we can afford to ignore. If foreign issuers are allowed to operate freely in the U.S., they could continue to exploit the system to facilitate these dangerous activities. According to the Wall Street Journal, which has reported extensively on the abuse of digital assets by Russian middlemen to evade sanctions and trade for billions of dollars worth of weapons parts, quote, for Vladimir Putin's war machine, Tether has become indispensable, close quote. Russian companies have specifically relied on stablecoin to procure drone parts and other high-tech equipment for Vladimir Putin's invasion of Ukraine, with Russian middlemen converting rubles into Tether and paying out local currency to foreign suppliers in China and the Middle East. Our prior oversight work on this committee has evidenced the same. Just last December, we learned that Treasury's Office of Foreign Asset Control sanctions several individuals and entities associated with the TGR Group. This international money laundering network used Tether and other stablecoins to facilitate illicit activity and sanctions evasion on behalf of Russian elites. If this committee wants to maintain a transparent, secure, and accountable U.S. financial market that is the envy of the world, then we need to ensure that foreign actors do not undermine our system. Allowing foreign-issued stablecoins like Tether to operate without proper oversight would only expose American consumers to financial harm, but it would enable bad actors to continue exploiting loopholes in our regulatory framework. So I urge my colleagues to support this amendment to ensure that foreign-issued stablecoins cannot be used as a backdoor to circumvent the regulations that you are working to put in place. This is about making sure that the U.S. remains a leader in financial regulation and that our financial system is not compromised by those who operate outside of our laws. So if we are to pass this bill, it would be great if it actually applied to all stablecoins, and that for those that would not comply, we keep those outside our borders. It's not outside of what you've already considered in the main bill. It just it harmonizes, I think, our national interests with the purposes of the bill. Thank you, and I yield back.
Gentleman yields back, who seeks recognition. Did you reserve a point of order?
I will withdraw my point of order.
You didn't reserve one, but I'm going to assume that you reserved one and then you just withdrew it. Is that fair?
I reserve and withdraw, Mr.
There you
Chairman.
go. Thank you.
And I would move to strike the last word.
The gentleman from Wisconsin has withdrawn a point of order, and he is recognized for 5 minutes.
I thank the chairman. I think it's worth noting that in the United States, we have a history of allowing foreign firms that are from countries with substantially similar in the United States. And so as we leave stablecoins and we think about other financial services spaces, we can think about the banking sector, where RBC, Royal Bank of Canada, is able to operate with integrity in the United States. And so as we look back at how we structured the stablecoin bill, the amendment as offered would not allow any person to, and I'm going to quote this, would not allow any person to, quote, transact using a payment stablecoin through the use of any medium or by any means of access to interstate commerce, end quote. So it would set up a structure of punishing an individual from using a foreign-issued stablecoin, maybe that they acquired abroad. So you can envision a scenario where a U.S. citizen travels abroad, they engage in commerce with a stablecoin outside the regime of the United States, outside the jurisdiction of the United States, and then would return back to the United States, maybe with that digital asset in their personal wallet. That I don't think is something that we want to criminalize the behavior of. The Stable Act instead takes what I view as a balanced approach by restricting non-permitted stablecoins' ability to be offered on an exchange, but do not punish individuals for merely having a token in their wallet. And so I appreciate kind of the thought process here of the underlying amendment, but I think the underlying text of the bill is a balanced approach, is well-reasoned, and I think it works well. And I encourage my colleagues to vote no on the amendment before us.
Gentleman yields back. Seeks recognition. The ranking member.
I move to strike the last word.
Gentlewoman's recognized.
This amendment would include critical language that was originally proposed under my bipartisan legislation that I had worked out with former Chairman McHenry, which addresses a loophole for risky offshore firms like Tether to issue a stable coin in the United States. This amendment would simply make it unlawful to issue directly or indirectly a payment stable coin for use by consumers in the United States that is not approved under this bill. This language would ultimately block foreign issuers like Tether, which is the largest global stablecoin issuer, from issuing stablecoins for use by U.S. consumers without being subject to proper regulations, examinations, and enforcement by U.S. regulators. Tether is widely known for its opaque operations and recognized as the stablecoin of choice for criminal activity across the world, like money laundering, terrorism, illegal trafficking, cyber fraud, and more. Financial regulators and policymakers have long raised concerns regarding Tether's violations of economic sanctions and anti-money laundering rules. Tether's attestations also failed to provide sufficient transparency and address concerns about the company's practices. This amendment would ensure U.S. customers are not subject to the risk arising from Tether and similar shadowy stable coin firms without proper oversight. I think I heard Mr. Steil say there's no need for this, that somehow it's covered or taken care of or will be covered and taken care of. I don't know which he said, but it seems to me we would all be concerned about this. We're forewarned about Tether and some of their past activity and what they're capable of doing. What's wrong with adopting language here today that would ensure that we do not allow them to operate in this manner in this country? Mr. Hill?
Are you yielding back?
I yield to you.
Well, okay. I think the Senate bill was insufficient on this point, and I think our bill is quite clear that a stablecoin issuer that's not incorporated and operating under the laws of the United States may not offer directly or indirectly that stablecoin in the U.S. unless they come into the United States and be subject to the U.S. law, or they operate in a jurisdiction that, like we do for banking and like we do for securities, has a substantially similar enforcement and regulatory system that our Treasury Secretary certifies as substantially similar. This is how we've operated globally. We have, as Chairman Steil noted, foreign banks, foreign broker-dealers, others doing business in the United States, and they are admitted into the country either as a branch in the case of some banks, or they're operating the company pursuant to a reciprocal arrangement with their host
Reclaiming
country.
my time, Mr. Chairman.
Yield back to the
I'd like to
gentleman.
get back to Mr. Lynch. He would not have proposed this if he thought it had been well taken care of. I yield to Mr. Lynch.
Thank the ranking member. Look, this empowers our country. So it prevents a foreign stablecoin from being offered directly or indirectly in the United States unless the government authorizes it. So this is a shield. So look, we all know that Tether is operating in Iran. It's facilitating the conversion of resources to Iran, Venezuela, Russia. So this would allow your law that you're passing to be applied to those foreign stable coins. This would empower what you're trying to pass by giving the ability of Treasury to authorize those stable coins that you welcome and want to have in the country, but it gives you the ability to reject those that are feeding, terrorism, illegal finance, tax evasion. So,
Gentleman yields back.
this is not a hostile amendment. This was to be in harmony with what you're doing here
Gentleman's
today.
time has expired.
Mr. Chairman,
Who seeks recognition?
Timmons from South Carolina.
Mr. Timmons of South Carolina, recognized to strike the last word.
Thank you. I move to strike the last word. I too want to speak against this amendment. The purpose of the Stable Act is to create a global system that protects consumers and allows digital assets to thrive, not only in the United States, but in the global economy. This is not a U.S. We want to be the center of the crypto future, but we are not going to exclude the rest of the global economy. And while I disagree with this amendment, I actually do have an issue that I'd like to discuss regarding Section 3. And it's from the last 6 years of my time in Congress. My concerns with Section 3 is the role of the Treasury Secretary and their ability to unilaterally deem a foreign regulator out of compliance. So we see the wild swings in policy from administration to administration, whether it is at the SEC, the CFPB, DOJ, FBI, and the business community wants stability. They want predictability. They want to be able to invest long-term and know that the world is not going to so violently change. And if that's not enough, just the predictability aspect of it, we also have the weaponization aspect of it. So the last administration, you saw political appointees abusing their authority at the CFPB, at the SEC, at the DOJ, and we need to learn from the past, and we need to make the Stable Act more protected and insulated from political whims. So to that end, and I had an amendment that I was working on, but I am not going to submit it. We've agreed to a colloquy, and this is something that we're going to work on long term, but I believe that the Treasury Secretary, if he deems a foreign regulator out of compliance, that there needs to be a notice requirement where that foreign government receives a written notice of deficiency of what is wrong with their system, and then have an opportunity to cure that deficiency with also having a national security exemption for exigent and extraordinary circumstances. I think that additional check and balance will further allow the Stable Act to thrive and allow digital assets to thrive in the global economy while making sure that the U.S. is still the best place to start and to build a business. And I appreciate Chairman Hill and Chairman Steil's willingness to work with me on this, and I look forward to making sure this issue is addressed in the bill that the President's going to sign shortly.
Would the gentleman yield?
Yes.
I thank you for raising this issue. I think it's very important that we get the Treasury Secretary's role correct here, and I'll say in conjunction with all the regulatory agencies, because it's in consultation with the stablecoin regulators collectively that make a determination if a nation is comparable to the requirements under the Act. That's the standard. And this is the same kind of standard we use in other cross-border financial regulatory situations, so that we can count on the enforcement and the regulatory standards in the foreign country. And so I think it's important that analysis and that there be an appropriate balance there. So I thank the gentleman from South Carolina for his work on this, and I yield back to him.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. Who seeks recognition? I'll recognize myself for 5 minutes. I want to thank Mr. Lynch for his, I'm sorry, Mr. Chairman, did you want to speak on this amendment? No, we're not ready for that yet. Just un momento. I want to thank Mr. Lynch for his thoughtful amendment. I think he raises an important point. I think it's shared with both sides of the aisle that we want America to be the name and rule of law as it relates to issuing payment stable coins, and that people want access to the American market. They need to come in and be incorporated here and be subject to American regulation and supervision. And I respect his views on that. I think this certification process that we have of foreign jurisdictions, because I've seen it work in banking and securities, can be made to work in a successful manner. I urge my friend from Massachusetts to engage in thinking about that. The other thing that I note in his amendment, I just would call to his attention, Chairman Steil referenced it early in his initial response, is unlawful for any person. So when we talk about it in an institutional context, in an issuer or a regulated entity under the Act, so an exchange or someone engaged in the business. But as Mr. Steil noted, people can incidentally not be in the business but would fall afoul of your wording. They could come back, or they could have a business in Argentina. They could be using a non-U.S. stable coin in that business efforts outside the United States, have it in their wallet and seek to convert that back into dollars, for example, in the United States, and they might run afoul of the way your amendment is precisely worded, because they're not holding themselves out doing business, they're just doing it incidentally, which is why we phrased it the way we did in Section 3 of the draft bill. I'd urge my colleagues to work with Chairman Steil if they have suggestions on Section 3. I think it's adequate to enforce the laws, and it does not permit a non-compliant stablecoin issuer to come into the U.S. and issue or offer stablecoins without being in a jurisdiction that's fully vetted and recognized by the United States. And I'd also just say for our discussion, I don't know of a stablecoin issuer in the state of New York or internationally that's active that would meet the standards under the Stable Act, meaning I think they all have a lot of work to do to meet the full requirements that are contemplated by the Stable Act in order to be fully in compliance. But again, I thank my friend. He and I have worked on illicit finance issues for years together. He raises an important point, and I yield back the balance of my time. But I do urge my colleagues to reject his amendment, and let's work together on Section 3. If there's no further debate, the question now occurs on the amendment from the gentleman from Massachusetts. All those in favor, please say aye.
Aye.
All those opposed, please say nay. Nay. In opinion of the chair, the nays have it. The nays have it. The amendment is not adopted. Roll call votes have been requested. All those in favor of recorded vote, raise your hands. Sufficient number having raised their hand, recorded vote is so ordered pursuant to subsection C5 of Rule 3. The committee rules. Further proceedings on the amendment are postponed. Is there an additional amendment? Mr. Lynch.
Thank you, Mr. Chairman. This amendment would, I have an amendment at the desk.
Pause for it to be distributed.
Mr. Chairman, request a point of order.
The gentleman from Kentucky is recognized for a point of order. Oh, you're reserving a point of order. Sorry, I thought you had a question. Beg your pardon. Gentleman's reserved a point of order. Clerk will report the amendment.
Sorry, it was Mr. Sherman.
Yep, sorry. Stand by. We have the wrong Sherman amendment. Stand by.
I'm sorry, Sherman.
Congressman, are you okay with Mr. Sherman going next?
Whatever is easiest. I'm happy to do whatever you guys want. I'm going to cooperate.
Mr. Chairman, I have an amendment at the desk, which I believe is the one they may have been handing out.
The clerk is distributing the amendment.
Yes. Okay.
Okay, so I'm going to go.
I'll take one.
It's okay, they're going this one, I guess.
Sherman?
Okay, here we go. Shiver.
No, it's Sherman, and yeah, Sherman has two. He's got two back to back.
Still doing yours.
Doing my two back to back. Good.
Money laundering.
No, that's not the word.
Nope.
It's this one. It's this one.
Okay, I agree.
There are 4 more minutes before you. I'm good. That's okay. That's okay. I'm surprised it's gone as smoothly as it has. I'm surprised it's gone as smoothly as it has.
They're not going to vote for it whether they read it or not.
Mr. Sherman, you got, it's AML, and then after that is
Mixers.
Mixers.
Right,
Yep,
that's
so
it.
you're back to it.
Good.
They'll give him the right one.
It's money.
Yes.
The Sherman Amendment has now been distributed. A point of order on the Sherman Amendment has been held by the gentleman from Kentucky, and the clerk will please report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Sherman of California, designated as...
Without objection, the
28.
amendment is considered as read. The gentleman from California is recognized for 5 minutes on his amendment.
The crypto universe can thrive only if it is both above and below the water. You see, if it's just a method that's subject all entirely to know your customer and anti-money laundering, it has no particular advantage over the US dollar and a lot of disadvantages, including the price changes every few minutes. So it has to be above the water. A portion of it has to be subject to the know your customer. And then it also has to function below the water without know your customer so that it becomes a payment system that has a substantial value to some people. Others may use it just because it's there, but it has to have a substantial advantage to the majority of users. That advantage is that the underwater portion will be excluded from the anti-money laundering provisions. Now, this amendment would apply anti-money laundering and know your customer requirements to all persons that transfer payment stablecoins between wallets, including unhosted wallets. So the crypto world isn't going to like this because it deals with the unhosted wallets. And an unhosted wallet, I think as we all know, is a situation where you're sending the money to a number, but you have no idea who that person is, and there's no way for law enforcement to find out even if they had a warrant. So I can't say that I'm going to get a whole lot of support on the Republican side for this amendment, but this amendment would apply the anti-money laundering provisions to both the hosted and the unhosted wallet. Both the account at Coinbase, where a court order could reveal the information, and the numbered account where nobody knows who it is. So if you have an unhosted wallet and you're unwilling to reveal who you are, then you can't play with the stablecoin, nor can the portion of the stablecoin ecosphere that is above the water do business with you. I think it's a simple amendment, and I'm looking to see if anybody wants me to yield time, and seeing none, yield back to the chair.
Gentleman yields back. The gentleman from Ohio, Mr. Davidson, is recognized to strike the last word.
I thank the chairman. Look, the gentleman's amendment sounds like it protects people, but the reality is the underlying bill already offers the exact same protections. The know your customer obligations are very explicit on stablecoin issuers and frankly the banks that customers would use to move money with their cash to acquire stablecoins. So the know your customer provisions are already there. There are on-ramps and off-ramps. That's where the surveillance is. Individuals aren't complying with the Bank Secrecy Act today. It would require rulemaking for people that aren't even covered directly by it. The Bank Secrecy Act applies to people that operate banks and money service businesses, and the underlying Stable Act requires compliance with those laws. So the protections are in fact already there. I urge opposition to the bill, and I yield to the chairman.
Will the gentleman yield?
I yield to Chairman Steil.
Okay.
The gentleman is yield back. Does any other member seek recognition?
Can you give me a minute?
Mr. Foster is recognized for 5 minutes.
I'll yield to
strike the last
Mr.
word.
Chairman.
Yeah. If the gentleman's right and the amendment is harmless, I would hope that the Republican majority would accept it. If the amendment has teeth and will prevent the use of unhosted wallets to evade the anti-money laundering provision, then I'm sure that all those who support every part of the program of the crypto community will oppose the amendment. So if the strongest argument against this amendment is that it's harmless, I think it would be accepted.
Will the gentleman yield?
The gentleman from Illinois.
I yield back.
The gentleman yields back. Does any other member seek recognition? Seeing none, I recognize myself for 5 minutes on the bill. Requiring FinCEN and KYC of every single self-hosted wallet, not only not really appropriate in this particular legislative vehicle, but it would also really apply bank-like standards to individual Americans making transfers for their own personal and family purposes. It'd be like KYCing every physical wallet with cash in it. It'd be a dramatic invasion of personal liberty. So the good news is with blockchain technology, there's transparency. So law enforcement can leverage the transparency of the blockchain to follow the money between bad actors. But individual Americans should not be treated the same as financial institutions. And so I will be opposing this amendment and happy to yield to my colleague from Ohio if he wishes.
No, I think the chairman made the point exactly. It wouldn't be a harmless amendment. It would actually create a rulemaking burden on Treasury to somehow find a way to start regulating individuals as if they were banks. And so it's a very bad idea, and I yield to the chairman.
The gentleman yields back. Is there any further debate on the amendment? If there's no further debate, the question now occurs on the amendment offered by Mr. Sherman from California. All those in favor signify by saying aye.
Aye.
Those opposed, nay. The opinion of the chair is the nays have it. The nays have it, and the amendment is not adopted.
On that, I request a recorded vote.
A recorded vote is requested. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendments are postponed. Is there an additional amendment?
Yes, I have an amendment at the desk.
Mr. Sherman has another amendment at the desk.
This is the one that deals with mixers.
We'll pause while the clerk distributes the amendment.
Mr. Chairman, reserve a point of order.
The gentleman from Kentucky reserves a point of order. The clerk will please report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392.
Without objection, the amendment is considered read. The gentleman from California, Mr. Sherman, is recognized for 5 minutes on his amendment.
I think I can get a round of applause in the room by indicating this is my last amendment to this particular bill.
True.
This amendment is quite simple. It prohibits the use of mixers for any of these stable coins, and by the nature of, and of course, being added to the bill, it's authorizing and directing the Secretary of the Treasury to issue the appropriate regulations. What is a mixer? A mixer is there to help make sure that even with a court order, the information is not available to law enforcement. A mixer is there to mix up law enforcement. Who wants to mix up law enforcement? People who are doing illegal things. So if we want the stable coins to play a good role in our society, we would not want them to be subject to use to a mixing device, which is there to confuse law enforcement. I'll point out that just last month, the Trump administration removed sanctions against Toronado Cash, which is a crypto mixer, which was responsible for getting U.S. dollars to terrorist organizations. I hope that we would, there is no legitimate purpose of a mixer unless you think it's legitimate to hide transactions from the court system, including family law, where spouses are fighting about money, or you think it's legitimate to evade law enforcement, including the IRS when they have a warrant. And if this is a chance for people to show whether they're on the side of law enforcement or on the side of those who can make money by designing a tool which is usable in a mixer system, the sole purpose of which is to evade U.S. law and to promote and facilitate criminality. With that, I'll look around. I see nobody asking me to yield time, and I'll yield back to the chair.
The gentleman yields back to the gentleman from Kentucky insists on his point of order. The gentleman withdraws his point of order. The gentleman from Ohio, Mr. Davidson, is recognized for 5 minutes to strike the last word.
I thank the chairman. Mixers sound okay until when you listen to Mr. Sherman, but the reality is there is a legitimate use case. When you have a checking account, and in the old school days, you would write longhand the checking account. It had your routing number and checking account number. That was a security risk, so people have diminished checks, but it didn't reveal how much money you have in your bank account. The reality is, because a public blockchain is there, it's knowable how much is in the wallet that the money was transferred from. So you wouldn't want to necessarily reveal how much money you have. So what the gentleman refers to as mixing is simply sometimes taking a wallet that has a significant amount of money in it and mixing it so that you move it into a smaller wallet, so you're only paying the $200 for the service and not revealing that you might have, $10,000 in the wallet that it was moved from. So it is a useful purpose for legitimate uses by law-abiding citizens, and it shouldn't be undermined by the gentleman's amendment. And I yield to the chairman.
The gentleman yields back. Does any other member seek recognition? The incorrectly nameplate labeled Mr. Caston from Illinois is recognized.
Mr. Caston, Ms. Waters, whatever you'd like to refer to me as. Thank you, Mr. Chairman. I support Representative Sherman's amendment, and I wish we could have a conversation about this issue that doesn't so quickly get into intellectual dishonesty. We hear on the one hand that we don't need all this enforcement, we don't need all this tracking because the blockchain lets us know all the history of transactions. On the other hand, it's really important for us to have anonymity because there's all sorts of reasons why we have to have mixers. Those two things are not intellectually consistent. And we need Representative Sherman's amendment to do something really important, to say that entities who are deemed payment stablecoin issuers under this bill would have to prevent their tokens from being laundered through mixers because that's what they do. We know that mixers, which obfuscate the source, destination, or amount involved in their transactions, play a serious role in financial crime, including money laundering. Treasury's Financial Crime Enforcement Network, working with law enforcement and other national security agencies, issued a determination in 2023 that convertible virtual currency mixers were, quote, a primary money laundering concern. This rare designation from FinCEN was issued because, as FinCEN said at the time, quote, mixing transactions are frequently used by criminals and state actors to facilitate a range of illicit activity, including but not limited to money laundering, sanctions evasion, and WMD, weapons of mass destruction, proliferation by North Korea, Russian-associated ransomware attacks, and illicit darknet markets. Further, a recent assessment by FinCEN determined that the percentage of transactions processed by mixers that originated from likely illicit sources is increasing, end quote. To say that payment stablecoin issuers would have to build protections into their technology to block mixer addresses on their blockchains is to say that these US dollar-backed stablecoin issuers will take action to make it harder for ransomware perpetrators, cyber thieves, and fraudsters to launder the proceeds of their crime. That seems important. It's one that I would think everybody here should support, especially if we're all concerned, as I think we are, with fentanyl trafficking, Iran, North Korea's nuclear ambitions. The idea that this is just some noble person who wants to hide their bank account violates all the fact that we know how people are using this. They're using it to do bad things and to hide their trails. I can't imagine under what circumstance it is in the United States' interest to make it easier for people to traffic drugs, to facilitate weapons of mass destruction, to fund the North Korean nuclear program. I don't think that is the purpose of U.S. fiscal policy. We need Mr. Sherman's amendment, not just vote for it, we need it if we're going to say we believe what we say we believe. Urge my colleagues to support the amendment and yield back.
Gentleman yields back. Does any other member seek recognition on the amendment? Seeing none, I recognize myself for 5 minutes to strike the last word. I think this broader conversation as it relates to sanctions is a pretty worthy conversation of the committee. The bill is really just not the appropriate vehicle for this type of restriction that would fall on entities other than payment stablecoin issuers because it falls on other market participants. So in addition, this amendment I think is also a little overly broad and under-specified. It risks sweeping into a prohibition that providers of software services that can be used by the general public, including for lawful purposes. And so the gentleman is only interested in prohibiting mixers being used to evade other sanctions, and that is a different amendment with a narrower scope than the one he's proposed, something that's probably worthy of a conversation in a dialogue as we look to move forward in the broader digital asset space. So I appreciate maybe the intent of the underlying amendment, but I don't think that it's specific. I think it's outside the context of the underlying bill, and so I'd encourage my colleagues to vote no on the bill. Is there further debate on the amendment? Seeing none, if there's no further debate, the question now occurs on the amendment offered by the gentleman from California, Mr. Sherman. All those in favor signify by saying aye.
Aye.
All those opposed, no. No. In the opinion of the chair, the noes have it. The noes have it, and the amendment is not adopted.
I ask for recorded vote.
Recorded vote is requested. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. Is there an additional amendment? Mr. Foster is recognized.
What? So, my amendment, yeah, okay. Yeah, I have an amendment at the desk.
It is Foster. Mr. Foster has an amendment at the desk. Does the gentleman from Kentucky request a point of order?
Reserves a point of order.
The gentleman reserves a point of order. The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute
Without
to
objection,
H.R.
the amendment is considered
2392.
read. The gentleman from Illinois is recognized for 5 minutes on his amendment.
Thank you, Mr. Chair. My amendment simply inserts the language from the Senate bill that will require stable coins issued under this bill to build the capability to freeze, seize, and burn the tokens themselves when they are identified to have been used for illicit purposes, such as drug trafficking, terrorism finance, you name it. And these provisions just allow stablecoin issuers, in coordination with law enforcement officials, to freeze, confiscate, or destroy these stablecoins. Nearly all of the major stablecoin issuers operating in the United States today have this capability already built into their stablecoins. And this amendment would simply make clear that this should be the standard for all stablecoins issued here in the United States. In our March 11th full committee hearing, one of the Republican witnesses enthusiastically pointed out that they had been very successful at blocking some major illicit activities using these capabilities. In fact, just this last month, stablecoin issuers have reportedly used this capability to freeze nearly $30 million in stablecoins associated with suspicious activity or sanctions. Digital assets without this capability have almost no mechanism to limit their movement around the world, allowing them to be stolen by bad actors, sent overseas, run through a mixer, and deposited into the pockets of scammers, criminals, and our adversaries. It's not perfect, but it allows you, because, among other things, you can't always detect which wallets have been used for bad purposes. But when you do detect that, it provides a mechanism to be able to freeze and reverse mistaken or fraudulent transactions. So although this language won't entirely halt the use of stablecoins in illicit finance, it allows the assets to be made useless or inaccessible to criminals once they've been identified. So I appreciate why the Senate included this language, and that's why I'm offering this amendment. That's it. Yield back.
The gentleman yields back. Does any member seek recognition? Does any member seek recognition? Does the gentleman from Kentucky insist on his point of order? The gentleman withdraws his point of order. Mr. Kasten from Illinois, now properly labeled, is recognized to strike the last word.
Thank you, Mr. Chair. I want to support Mr. Foster's amendment. This amendment would add important national security capabilities to this bill. It would ensure that regulators require payment stablecoin issuers to build into their technology the capacity to freeze on-chain. So that means that payment stablecoin issuers who are created by this bill would have the tools to restrict access to funds held in those stablecoins in the event that they need to do so to comply with regulations to prevent illicit activities. Let's just imagine a scenario. The FBI comes to a payment stablecoin issuer, proof, court order, says that U.S. registered corporate entity to which it sold its stablecoins is actually owned by Iran's Islamic Revolutionary Council Guard or the Sinaloa cartel or some other bad actor. The issuer would then have the tool to freeze the addresses, blacklist, and even confiscate those tokens. That would ensure that bad actors would not be able to access or transfer those tokens to continue with their fraud, money laundering, or sanctions evasion violations. Many of the prominent existing stablecoin issuers, such as Paxos, Tether, and Circle, already have this capability, and many new companies that arise should be compelled to do the same. I would add that similar language is already in the Senate's Genius Act, so we should have the same protections in the House stablecoin bill. I urge members to support the amendment, and I yield back.
The gentleman yields back. Is there further debate on the amendment? Seeing none, I'll recognize myself for 5 minutes. I'm going to strike the last word. Statutorily requiring all payment stablecoin issuers under the Bank Secrecy Act to block, freeze, or reject transactions would raise legal, technical, and policy problems. We want to be careful not to push innovation into closed systems and risk driving development offshore, undermining the open, interoperable financial ecosystem that stablecoins help enable. The Stable Act already requires issuers to engage in robust BSA compliance, including via AML programs, monitoring suspicious activity, which can include appropriate distributed ledger analytics, as well as compliance with sanctions. Because of that, I urge my colleagues to reject this amendment, and I yield back. Is there further debate? If there's no further debate, the question now occurs on the amendment offered by the gentleman from Illinois, Mr. Foster. All those in favor signify by saying aye.
Aye.
All those opposed, no. No. In the opinion of the chairs, the noes have it, and the amendment is not adopted.
Recorded vote.
The gentleman requests a recorded vote. All those in favor of recorded vote, please raise your hand. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. Is there an additional amendment? Who would like first?
Whatever you want to go first.
Mr. Caston of Illinois has an amendment at the desk.
I'd like to reserve a point of order.
The gentleman from Kentucky reserves the point of order. The clerk will please report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392.
Without objection, the amendment is considered read. The gentleman from Illinois is recognized for 5 minutes on the amendment.
Thank you, Mr. Chairman. I want to just comment, there's a consistent theme here that when the Democrats are introducing legislation to prevent criminal activity, the response is this would constrain innovation. I would note that if we were to pass a bill that said Walter White cannot excavate a cavern underneath a dry cleaner, that would also constrain Walter White's ability to innovate. Not all innovation is good, my friends. There are a lot of smart criminals in the world who do a lot of innovation. It ain't always good, even though I'm told that meth that Mr. White made was really exceptional. What this amendment would do is to build on Mr. Foster's amendment by directing the Treasury Department in consultation with the Department of Justice to propose a rule that outlines under what scenarios a stablecoin issuer must act to block illicit stablecoin transactions without explicit authorization. The amendment would also apply to foreign issuers like Tether. Similar to traditional banks, stablecoins can play an important role in restricting access to assets limited to criminal activity. Financial institutions today have systems in place to block, freeze, reject transactions, report suspicious transactions to FinCEN, file currency transaction reports with OFAC, SARS, what have you. Similarly, stablecoins are generally centrally controlled, allowing issuers to freeze and even burn tokens associated with illicit activity. We've heard people in this committee in prior hearings have made that point. Stablecoin issuers work with law enforcement agencies and blockchain analytics firms to monitor transactions in real time. That happens already. When suspicious wallets are identified, stablecoin issuers can blacklist addresses, preventing criminals from using the frozen funds and assisting authorities in recovering those funds. Stablecoin issuers generally only act to freeze stablecoin transactions if they receive a court order or a directive from a federal law enforcement agency, although I would note that there have been instances where stablecoin issuers have acted without explicit authorization to blacklist wallets linked to North Korean state-sponsored hackers. However, there has been some criticism of at least one stablecoin issuer, I believe this was Circle, for taking 4 months to cut off North Korea's funding streams. We got to understand 4 months, and this goes back to the comment I made before about Axel Foley and Beverly Hills Cop. It is one thing to say these things are illegal. It is something else to say, do our enforcement authorities have the ability to move quickly enough? It took them 4 months to shut off North Korea's funding returns. Well, let's review the bidding. Last month, it took just 2 minutes for North Korean hackers to steal $1.5 billion from Bybit, one of the largest cryptocurrency exchanges, and start moving those funds. The hackers were able to launder 300 million of that, or 20% of that total, of those stolen funds almost instantaneously because of the nature of digital money. According to the blockchain analytics firm Elliptic, those funds have, quote, gone dark and will likely never be recovered. In that context, if you're going to take 4 months to shut it down, you might as well take never because the money's gone. Since 2017, North Korea has stolen more than $5 billion worth of cryptocurrency, including this latest exploit. Experts say that the North Korean hackers are working nearly 24 hours a day and potentially funneling the money into the regime's military development, including their nuclear weapons program. In fact, national security officials estimate that half of North Korea's nuclear program is funded by cryptocurrency theft and cyber attacks. So if this committee is serious about addressing those national security risks, lawmakers, regulators, and industry have to remain vigilant about it and consider tactics to respond to activities like North Korea's use of cryptocurrency to develop nuclear weapons. I think this amendment strikes the right balance between providing adequate tools to detect and prevent illicit activity while also safeguarding against unreasonable searches and seizures and protecting privacy. I urge my colleagues to support this amendment, and I yield back.
Does any other member seek recognition? Mr. Foster of Illinois.
I just want to say that there are examples you can think of pretty simple rules that all of us would agree should trigger action. You know, for example, if it's found that this wall is under the control of a sanctioned entity, you know, there should be a default understanding that everyone involved should immediately freeze that. And so, you know, there are simple rules. There are times when you have to go to a court. If the situation's complicated, go to a court, have it discussed, you know, get a warrant and have an action taken that way. But there's a real merit to having rules for the simple cases, and that's why I support this amendment.
The gentleman yields back. Gentleman yields back. Mr. Lynch, Massachusetts, recognized for 5 minutes.
Thank you. I certainly support Mr. Caston's amendment. Given the nature of stable coins themselves, but also recognizing that since February 10th, President Trump has suspended the Foreign Corrupt Practices Act, and so we have very little operationally to thwart the type of activity, illicit and illegal activity, criminal activity, that Mr. Caston is trying to get at in his amendment. So with that, I'll yield back.
Gentleman yields back. Does any other member seek recognition? Seeing none, I'll recognize myself for 5 minutes for the purpose of striking the last word. I rise to oppose Mr. Caston's amendment. I think it's really important to note that under current law, OFAC already requires all U.S. persons, including entities in the U.S. and incorporated in the U.S., to block transactions involving sanctioned persons. So in other words, blocking is already part of OFAC regulations, and so therefore the amendment is unnecessary. There's also a litany of other tools that digital asset firms and stablecoin users use to prevent these kinds of transactions before they happen in the first place. So with that said, I urge my colleagues to oppose the amendment, and I yield back. Is there further debate on the amendment? If there's no further debate, the question now occurs on the amendment. If the gentleman from Kentucky withdraws his point of order, so the question now occurs on the amendment offered by Mr. Caston of Illinois, properly labeled. I should be able to get this. All those in favor of the amendment shall signify by saying aye. Aye. All those opposed, no. In the opinion of chairs, the noes have it. The amendment is not adopted. A recorded vote is requested. All those in favor of a recorded vote signify by raising your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. Is there an additional amendment? Mr. Lynch of Massachusetts is recognized.
Thank you, Mr. Chairman. Mr. Chairman, I believe I have an amendment at the desk.
Mr. Lynch has an amendment at the desk. The clerk will distribute the amendment. The clerk will please report the amendment.
Thank you, sir.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Lynch.
Without objection, the amendment is considered as read. The gentleman from Massachusetts. The gentleman from Montana is requesting a point of order.
Mr. Chairman, I'd like to reserve a point of order.
Point of order has been reserved by the gentleman of Montana. Without objection, is considered as read. The gentleman from Massachusetts is recognized for 5 minutes on his amendment.
Thank you, Mr. Chairman. Mr. Chairman, this amendment would prohibit stablecoins from being issued if they are pegged to the national currency of a hostile foreign power. This committee should not allow stablecoins to be redeemable in money issued by China, Iran, Russia, North Korea, and other nations that are hostile to U.S. interests. Additionally, stablecoins should not be redeemable in money issued by the China-sponsored Asian Infrastructure Bank, the China-sponsored New Development Bank, and the Russian-sponsored Eurasian Development Bank. As reported by the President's Working Group on Digital Assets, stablecoins and other digital assets can be readily exploited by terrorist financiers and money launderers, and governments proliferating weapons of mass destruction to perpetrate illicit activities and evade U.S. and international sanction regimes. In particular, foreign stablecoins, CBDCs, and other digital assets could be developed to operate outside an integrated international financial system, thus making it easier for rogue actors or countries that are subject to sanctions to avoid those U.S. sanctions. Given the national security concerns and the lack of robust financial regulatory regimes and the President's February 10th suspension of the Foreign Corrupt Practices Act, stablecoins issued in the U.S. should be limited to the money issued by the Fed or G7 nations. With that, Mr. Chairman, I yield back.
Gentleman yields back. Who seeks recognition? The gentleman from Wisconsin. I'm sorry, I beg your pardon. Mr. Downing from Montana is recognized to strike the last word.
Yes, I'd like to withdraw my point of order.
Withdraw your, sorry, thank you. And he withdraws his point of order. Mr. Steil, you're recognized to strike the last word.
Thank you very much, Mr. Chairman. First, I think it's worth noting the Stable Act does not permit foreign government-issued obligations to act as reserves. So this amendment is really a solution in search of a problem. Second, the amendment specifies foreign governments that are subject to sanctions, but by definition, it'd be illegal to transact with such a government as all property and interest in property of the government would be blocked. So in other words, even if the bill allowed foreign government-issued reserves, which, again, it doesn't, it would still be illegal to purchase securities of sanctioned foreign governments. So the amendment is actually two solutions in search of one problem, two problems, three problems that don't exist. So I urge my colleagues to reject the amendment. And Mr. Chairman, I yield back.
Gentleman yields back. Who seeks recognition? Mr. Caston recognized to strike the last word.
Thank you, Mr. Chair. I want to commend Mr. Lynch for offering this amendment to ensure that the payment stablecoins discussed in this bill cannot be backed by currencies of nations that present a national security threat to the United States. Representative Lynch's amendment prohibits government-backed obligations of nations like Iran, Russia, Burma, Belarus, and North Korea from being included in a payment stablecoin's reserves. Importantly, it also means that the currencies and central banks of those nations will not have the benefit of being commingled in the same basket with stable, reliable, credible, and real currencies like the US dollar, euro, British pound, what have you. We've targeted with sanctions the governments, government-backed enterprises, and officials of those nations for good reason, and we have designated certain nations as state sponsors of terrorism for very good reasons. Representative Lynch's amendment will make it clear that those who want their stablecoins to be used by U.S. individuals and entities cannot provide economic benefits to those bad actors as well. I urge my colleagues to support this common sense amendment and yield the balance of my time to Mr. Lynch.
Thank you very much. I thank the gentleman for yielding. I would like to remind my colleagues that earlier the majority rejected an effort to prohibit foreign-issued stablecoins from being sold in this country. So there's nothing to stop foreign stablecoins from being backed by those foreign assets at all. There's no prohibition on that at all. And my amendment would have been to authorize the government to reject those applications.
Will the gentleman yield?
I would.
I think it's worth noting, maybe there's a point of clarification that would be helpful here in the structure of the bill. A foreign-issued stablecoin would still be subject to the rules and regulations of the bill. It would be a foreign-issued stablecoin from a substantially similar regime is authorized by the Secretary of the Treasury, and so therefore the functions of the bill would apply to that stablecoin.
If you're allowing them to operate either directly or indirectly without authorization by the United States, how would you know? How would you know? And on a permissionless public blockchain, how would you know? Okay.
Would gentleman yield?
I yield.
I'm happy to yield to a colloquy. I think it's my time, but I'll yield to the chair.
Oh, okay.
Oh, good. Sorry.
Thank you. Sorry, forgot about that.
No, I'm happy to yield.
Well, let me just respond briefly on that, just to reiterate that a foreign issuer, somebody that is a foreign stablecoin issuer outside the United States, may not issue that in the United States, in the secondary market, or issue directly without being in a regime, the United Kingdom, Switzerland, you name the location, that has been certified by the Secretary of the Treasury and the federal payment stablecoin regulators that it is substantially similar both on the reserves, the audit standards, the enforcement standards, et cetera. So I'm going to yield back to the gentleman. That's my only point there.
Well, this would just solidify that investing or having assets backed by any of these hostile powers would not be substantially similar to or under that regime, under that protocol.
Well, gentlemen, I know we're
Sure, I
still
yield.
your time. Gentlemen, yield. With the gentleman from Illinois, let me answer that question.
I'll yield to the gentleman who I yield to the gentleman from.
So I hear what you're saying, but of course, we already, in a hostile regime, that wouldn't be a certified entity because under all the other laws, the Secretary of Treasury wouldn't do that. And the bank regulators wouldn't do it. And they wouldn't qualify.
Okay, reclaiming my time.
Okay, yield back.
So it seems like we are bending over backwards in this bill to refrain from taking any action against anybody who's operating, even hostile powers. Those, that's a bridge too far. We cannot protect the consumers. We cannot protect them from bankruptcy. We cannot protect them from bailouts, because, dear Lord, that might inhibit the operation of these stable coins. We can cut 80,000 people from the VA. We can lay off 20,000 researchers at HHS, but we can't find a way to protect the American people in this bill. So I'll yield back. I yield back to the gentleman from
I
Illinois.
yield.
Mr. Caston yields back. Who seeks recognition? Is there any further debate on the amendment? If there's no further debate, the question now occurs on the amendment offered by the gentleman from Massachusetts, Mr. Lynch. All those in favor, please say aye. Aye. All those opposed, say no. No. The noes have it, and the amendment is not agreed to. The gentleman requests a recorded vote. With those wanting a recorded vote, raise your hands. A sufficient number having raised a recorded vote is agreed to. Pursuant to C5 of Rule 3, the committee further proceedings on the amendment are postponed. Yep. Is there additional amendment to the Steil A&S? Mr. Foster.
We have an amendment at the desk.
Stand by. Let us have it distributed. Gentleman from Montana.
Mr. Chairman, I'd like to reserve a point of order.
Gentleman reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Foster of Illinois, designated as 19.
The amendment will be considered as read, and I yield to the gentleman from Illinois, Dr. Foster, for 5 minutes to explain his amendment.
Thank you, Mr. Chair. This bill authorizes every stablecoin issuer to create a potentially vast payment highway with unlimited numbers of anonymous, unlicensed vehicles and with anonymous, unlicensed drivers on it, with everything dangerous that can happen on such a roadway. I believe that there is a marketplace, will be a market demand for a similar type of payment mechanism where the participants are actually licensed in some way, specifically KYC'd or something similar to that, so that you have an assurance. For example, if you go on a social media account and there's a blue check mark, that this is a person who is a real person who, if they do harm, is legally traceable. You don't have to know who they are, but you have to have some assurance that if they do you harm, if your screen locks up with ransomware, demanding a payment in this coin, that you can actually go to the legal system, figure out who they are, and haul them into court if they've done something illegal. Without that assurance, everyone operating on the payment rails that are proposed by this bill, must understand that they may be aiding and abetting criminal activities simply by using these, and not many people want to do that. And so there are multiple ways that this can happen. It was pointed out earlier in the debate that you could have a permission blockchain where simply the permission was getting KYC'd. And I think that would be a very simple, certainly technically feasible mechanism. And then operating with that coin, you'd know that everyone was KYC'd. I want to emphasize this was an optional thing. This is something that should be allowed and recognized by this legislation, that some people may want to have coins where all of the participants in that coin are simply legally traceable people, with all the anonymity that normal banks and more would allow. This would also be very useful for self-hosted wallets, which is not immediately obvious. The mechanism proposed here would allow you, if you spin up a self-hosted wallet and you say, okay, this is, I have my little piece of hardware with a self-hosted wallet on it, but I want to participate in a coin where all of the players are legitimate and traceable. Still, they can be anonymous until a criminal activity has been detected. But you can then register that self-hosted wallet with an entity, get yourself KYC'd, and then anyone looking at a transaction to your self-hosted wallet would be able to tell that, okay, you are a legally traceable person, you are not a crook. Because the vast majority of people using stablecoins are not crooks. They're operating off exchanges. They've already been KYC'd, in fact, in all probability. But there is an edge case of the people that are not, and we do not, I believe, want to construct an on-ramp for converting dirty money back into clean money. And this would allow you, back to the self-hosted wallets, actually there's some benefits in self-hosted wallets. If you're worried that the exchange you're operating on will go bankrupt and all of your coin will be tied up in bankruptcies, you feel more secure with a self-hosted wallet, that's fine. But at the same time, with the mechanism proposed by this amendment, or similar ones, you can actually participate and have the benefits of self-hosting and the benefits of everyone involved in that coin know that you are not a crook. And I think that the benefits of that sort of mechanism are going to be much wider than simply coins, stable coins rather. For example, NFTs, the market's basically shut down because of the amount of fraud on it. If all of the participants there had the ability to identify themselves in a legally traceable but anonymous way, I think there might be a hope of actually rescuing the NFT market and making it into something more successful than it currently is. Anyway, that's the mechanism that this is about, and there are multiple ways of accomplishing that, but I think it'd be very valuable if this legislation recognized that there was a role for coins where the players in that coin are basically KYC'd. And that's the purpose of the amendment, and happy to work with anyone who'd like to perfect this. But I think it's a very valuable thing and that we should be pursuing. Would be very important in getting my support for the underlying bill. Thank you. I yield back.
Gentleman yields back. Who seeks recognition? Mr. Steil, you're recognized to strike the last word.
Thank you very much, Mr. Chairman. I rise in opposition to Mr. Foster's amendment. I think it's important to note the Stable Act already treats stablecoin issuers as financial institutions under the Bank Secrecy Act and even delineates with strict requirements issuers that issuers must comply with. The treatment already encompasses appropriate know your customer procedures. So this is another amendment that restates current law, and for that reason I view it as unnecessary and urge my colleagues to oppose the gentleman's amendment. I'd also note my colleague's amendment is really outside the scope of the bill, and private sector entities are already working to provide options that my colleague is concerned about by providing wallet verification and broader analytic services. Optional wallet verification by the government's not appropriate for a discrete payment stablecoin bill designed to ensure the soundness of stablecoins. And so with that, I would urge my colleagues to oppose the amendment, and I'll yield back to the chair.
Gentleman yields back. Is there further debate? Mr. Downing, do you continue to ask for your point of order?
Mr. Chair, I withdraw my point of order.
Who seeks recognition? Ranking member is recognized to strike the last word.
I move to strike the last word.
You're recognized.
This amendment would seek to develop a path by which an individual wallet holder could choose to have their personal wallet verified as compliant with the Bank Secrecy Act. In asking the Financial Crimes Enforcement Network, that is FinCEN, to establish standards, centralized exchanges, payment stablecoin issuers, and other financial institutions that have customer identification programs and which do customers' due diligence could add essentially a seal of approval to a willing customer's wallet. Such a seal could travel with the customer through their transactions, facilitating their safe, secure onboarding into the financial system. The concept is an interesting one that seeks to create a voluntary option for those who wish to choose accessible, secure identity over the anonymous and dark corners of the crypto ecosystem. So I support the idea and support Mr. Foster's amendment. I yield back.
Gentlewoman yields back.
So what?
Anyone seek recognition to talk on Dr. Foster's amendment?
Mr. Chairman,
Gentlelady.
I would yield to Mr. Foster.
I just want to emphasize the voluntary nature of this, that I think it will be very useful if there's someone on the other side of a crypto transaction. You don't have to know who they are, but it would be very valuable to know that if something bad happens, that you actually you have some assurance that you'll be able to figure out who they are under some appropriate legal pattern. I think there would be a real appetite for that. It could be very lightweight. For example, you could get out your Real ID compliant digital driver's license, go hit competent federal authority and said, yep, you have just passed KYC for that purpose. So that this could be an almost instantaneous thing that would not be really very intrusive to the customer who was a good actor and simply wanted to be able to prove it and prove to the world that this wallet was a clean wallet. And so that's the purpose of the amendment. I think it would be a real boon, frankly, to the whole stablecoin ecosystem and the crypto ecosystem as a whole. Thank you. Then yield back.
Gentlewoman, yield back. Gentlewoman yields back. Who seeks recognition? If there's no further debate, the question now occurs on the amendment offered by the gentleman from Illinois. All those in favor, please say aye.
Aye.
Those who are opposed shall signify by saying nay. Nay. Independent chair, the nays have it. The nays have it. The amendment is not adopted. Recorded vote is requested. All those in favor, recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, proceedings are postponed. It's my intention to push through and continue this markup until we've completed consideration of all the noticed legislation. So I invite members and staff to be prepared for votes late into the evening. Is there an additional amendment to Mr. Steil's amendment in the nature of a substitute? Mr. Liccardo.
Thank you, Mr. Chair. I believe I have an amendment at the desk.
If you'd pause, we'll have it distributed.
Should be the one with the number 008. Thank you.
Mr. Chair, I move to
Downing?
reserve a point of order.
The gentleman's recognized.
Mr. Chair, I move to reserve a point of order.
A point of order is reserved by the gentleman from Montana. Clerk will report.
Amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Mr. Liccardo of California, designated as 8.
The amendment will be considered as read, and I now call on the gentleman from San Jose, California, to speak for 5 minutes in support of his amendment.
Thank you, Mr. Chair. Again, this amendment is focused on Section 3 because I think we recognize what's happening in the market with stablecoins. The largest issue, of course, is outside the country, and the extraterritorial effect of our regulation is of concern, and certainly we know that very, very limited. Reciprocity is the framework that's set out in this bill, and I understand why. I know it's a very pragmatic approach. My concern specifically is that the determination of the Secretary of Treasury about whether the regulatory regime of that foreign country is, in the terms of the bill, comparable to the requirements under this act is not guided by any specific criteria, in my view. And the word comparable, I believe, could be strengthened. What I had suggested is language very similar to what we see in the Senate version of this bill that would require the Senate to consider a number of specific elements such as the reserve requirements, supervision, sanctions, compliance standards, and other elements that we know are critical for any appropriate regulatory regime that we should have confidence and trust in. Of course, the elephant in the room is, again, Tether, which I have no reason to believe is anything other than a well-operating company. I don't pretend to know anything about Tether beyond what I read in the news. But I am concerned about conflicts of interest, given the position that Commerce Secretary Lutnick held as CEO of the company that was or is still the primary custodian of Tether. I know he stepped down as CEO. His son is now the current chairman of that company. I am concerned that we have very clear, very specific guidelines for the Secretary of Treasury's determination so that we can all have confidence about reciprocity and how it will be applied. I know I've had good conversations with Mr. Steil and the chairman. I appreciate that, and certainly would welcome Mr. Steil's response if the chair would be willing to enter a colloquy.
I appreciate my colleague from California, Mr. Liccardo, and appreciate your thoughtfulness and approach to this legislation and your work to further refine the bill, and in particular Section 3. As noted, the current draft provides the Secretary the ability to determine when foreign regimes are comparable to the requirements of the Act. And so it's my intention that comparable regimes would be subject to robust standards and that the American holders of stablecoins are protected. I think that we share this as a mutual goal. And so my colleagues looking for more assurances, I'm happy to work with you in further clarification of this between now and when we enter this to the floor. The same dialogue occurred earlier as it relates to the same section with Mr. Timmons and his interest as it relates to this broader process. And so with that commitment, I would request my colleague to withdraw the amendment and engage in a conversation with myself, the chairman of the full committee, Mr. Hill, and others as we work to further refine this prior to bringing the bill to the House floor.
Thank you, Mr. Stiles. I appreciate that. And with that, Mr. Chairman, I would request unanimous consent to withdraw.
Gentleman withdraws his amendment. I appreciate his work on this. I certainly reiterate that I'll work with him and with Chairman Steil to accommodate his very specific constructive comments on how to make the B paragraph on Section 3 more robust. The gentleman withdraws his amendment.
Yes, Mr. Chairman.
Is there additional amendment to Mr. Stiles' draft? Seeing no further amendments. Okay, well, I don't know how many times. I know.
There's a list, and Ms. Vasquez has two, and then I'm after her. I'm just waiting.
Okay, well, I don't have a list. I'm not going to be testy. I'm just going to simply say I asked for amendment. No one spoke up, so.
Mr. Chairman, I have an amendment at the desk.
Okay. Mr. Lynch.
Oh,
No, it's Ms. Vasquez
Okay.
first.
All right.
Ms. Velasquez.
Very good. Be delighted to hear from Ms. Velasquez.
Thank you so much.
You have an amendment at the desk?
Yes, I have an amendment.
Let's
at the
wait till it's
desk.
distributed, please.
Mr. Chair, I move to reserve a point of order.
Gentleman from Montana has reserved a point of order.
This is the one. This. We're tired, you know.
Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 2392, offered by Ms. Velasquez of New York, designated as 15.
The amendment will be considered as read, and I now yield to the gentlewoman from New York 5 minutes to explain her amendment.
Thank you, Mr. Chairman. My amendment is simple. It requires the Secretary of the Treasury, as Chair of the Financial Stability Oversight Council, to include in their annual report to Congress an assessment of the threat that payment stablecoins and the issuances of payment stablecoins pose to the financial stability of the United States. We established FSOC as part of the Dodd-Frank Act following the 2008 financial crisis to take a broad-based look at the financial system, look across agencies and regulators to study, investigate, and, if necessary, address potential sources of systemic risk. In my opinion, requiring the FSOC to report on a new financial innovation like payment stablecoins that have the potential to do significant damage to our financial system is exactly what we designed the FSOC to investigate and report on. As of March 5th, the market capitalization of stablecoins was approximately $230 billion. While some may argue the $230 billion market capitalization of payment stablecoin is dwarfed by the U.S. equities market by comparison, which currently has a market capitalization of more than $62 trillion, and therefore these coins pose little or not systemic risk. I would argue this market has expanded rapidly over the last several years. For example, in March 2020, the market capitalization of payment stablecoins was only $5.4 billion. And now look at it, it's at $230 billion. That is a growth rate of 46 times over just 5 years. And now we are legitimizing this industry through legislation I expect this industry to expand even more rapidly. We have already seen in other circumstances how rapid expansion and crashes of markets have the potential to pose a significant systemic threat. Stablecoins have already depicted on numerous occasions. For example, algorithmic stablecoins were an early breed of untested stablecoins. BitUSD began trading in 2014 and collapsed just 4 years later in 2018, after only 8 years and multiple other crashes. Algorithmic stablecoins have already been generally dismissed as a viable enterprise. Collateral and fiat-backed stablecoins have also failed to hold their pegs on multiple occasions. Between June 2021 and June 2023, Binance stablecoins, BUSD, depegged several times and by as much as 13 cents. The regional banking crisis in March 2023 resulted in Circle's USDC losing its peg to the dollar by as much as 13 cents. It is also important to note that Circle held $3.3 billion of USDC reserves in uninsured accounts at Silicon Valley Bank, reserves meant to ensure that consumers could redeem USDC at its alleged price of $1. And those reserves were given special treatment and guaranteed by the banking regulators after the collapse of the Silicon Valley Bank held off a broader banking crisis. Stablecoins also have operational risk challenges that can arise from the failure of participants in the network to respond to demand for processing transactions and the lack of accountability for risk management given the decentralized environment. Stablecoins are also vulnerable to bugs and hacks. They are also an unreliable of settlement, and users are not always able to redeem their rights in full and on demand. Should users be unable to redeem their rights in full on demand, it could certainly cause risk. Could never happen. That is the exact purpose of the FSOC and the reason for my amendment here today, to guard against this risk and ensure the impossible never occurs with payment stablecoins. Thank you, Mr. Chairman, I yield back.
Gentlewoman yields back. Does the gentleman from Montana maintain his point of order?
Mr. Chair, I withdraw my point of order.
Gentleman withdraws his point of order. Who seeks recognition? Gentleman from Wisconsin, the author of this Stable Act, Mr. Steil.
Appreciate that, Mr. Chairman, and move to strike the last word. I appreciate my colleague's amendment. However, I'm urging my colleagues to vote no on the amendment. FSOC already includes information on stablecoins and digital assets in their annual financial stability report. So I'm not implying that FSOC shouldn't be able to look at stablecoin activities and any financial stability consideration they pose through a balanced activities-based approach. This amendment just puts an unnecessary spotlight on stablecoin issuers. So if we recall, even former Treasury Secretary Yellen testified before this committee that stablecoins didn't pose a systemic risk to the financial system. We should instead ensure FSOC is responsive to the real financial stability risks our nation faces instead of being distracted. And so with those comments, Mr. Chairman, I yield to the chair.
Yeah, I thank the gentleman for his clarification. I think the gentlewoman from New York brings up an excellent point that's thoroughly vetted. As the chairman said, not only has the Treasury Secretary testified to this fact before the committee, but stable coins and their risk to the economy and the analysis around them was fully outlined in the 2024-2025 FSOC report, and it was a very thorough discussion. So I think this amendment's unnecessary, and I agree with Chairman Steil that people should not support it as it's already being taken care of. Who seeks recognition? The gentlewoman, ranking member of the full committee. Strike the last word.
I move to strike the last word. This amendment would require the Secretary of the Treasury to include the Financial Stability Oversight Council's annual reports to Congress, a section that discusses the status of the threat payment stablecoins pose to the financial stability of the United States. FSOC has systemic risk tools that can help prevent under-regulated stablecoins from threatening the stability of the U.S. financial system. FSOC's efforts to evaluate stablecoin risk and share that information with Congress are necessary given the broader economic risks that President Trump has recklessly adopted for the country. Since taking office, Trump's actions and policies are on track to engineer a recession and move our country into a period of higher inflation, reckless tariffs, and mass layoffs. On today's so-called Liberation Day, Trump has announced reciprocal tariffs of a minimum of 10% that runs as high as 49% that will not only hit our country's allies, but also American consumers who will have to deal with a sharp hike in prices. We've also learned from past collapses that stablecoins contain fragilities that make them vulnerable to runs and also pose risk to monetary policy, financial stability, and fair competition. These confirmed factors present apparent economic risk to American consumers who are already struggling. For these reasons, we must support the FSOC's efforts to continue to inform Congress on payment stablecoin risk, and I yield to the gentle lady from New York.
Thanks, the gentle lady, for yielding. It is true, Mr. Chairman, that FSOC is already charged with monitoring financial stability and reporting on those risks to Congress. But there is nothing in the statute that specifically requires FSOC to monitor or report on stablecoin. Following the financial crisis, we determined that there were gaps in the regulatory system, given segmented jurisdictional authority of regulators. Regulators were too siloed and missed emerging threats. FSOC was designed to help coordinate the regulatory agencies. Mr. Chairman, I am one of only a few members on this committee that was here prior to the financial crisis, and we listened to the experts tell us that these new and innovative products called credit default swap that were designed to ensure mortgage bonds were safe and an appropriate vehicle for banks and investors to park their money and will show them substantial returns. And look what happened. Subprime mortgages and their correlated credit default swap torpedo our financial system and our economy. I am not saying that stable coins will do that here. I hope they don't. But what I'm saying is that experts have told us that concerns being raised by new and innovative financial products are unfounded and could never happen, and yet they happen. This amendment will ensure we are monitoring those risks.
With the gentleman yield?
Yes.
Yes, thank you so much. Thank you so much. Oh, I'm sorry. Thank you. And I couldn't agree with you more. You've outlined it perfectly that, as they said, risks were hidden in plain sight, which was why FSOC was created to comprehensively look at bank and non-bank threats to the economy. And I think they have, and that's what Chairman Steil and I are noting, is that they have noted that these kind of financial innovations may pose risk and that they thoroughly cover them in the report. I don't think they're shirking their responsibility from Dodd-Frank. I yield back to the gentleman.
Reclaiming Ms. Waters' time. Mr. Chairman, requiring the FSOC to monitor and report on this new and rapidly expanded market is a prudent charge. I don't want to be here next year and telling you, I told you so. If this market and payment stablecoin issuers pose no systemic threat, then FSOC's job will be easy and inclusion minimal. On the other hand, not requiring FSOC to investigate and monitor this market could be catastrophic. And I yield back.
The gentlewoman yields back. Who seeks recognition? Is there any further debate on the gentlewoman's amendment?
Mr. Chairman?
Mr. Lynch?
Thank you, Mr. Chairman. I'd like to strike the last word.
Are you on her amendment? Yeah.
Mike.
I'd like to strike the last word.
Yes. Gentleman recognized.
Thank you. I fully support Ms. Velazquez's amendment. I think it's well-designed. It's targeted perfectly to the people who would be most interested in the safety and soundness of our financial system, including Treasury, the Fed, CFTC, the SEC, as well as the comptroller of the currency. But importantly, there are a number of non-voting members of FSOC that represent state interests, state banking, state insurance, that I think also, because of the structure of this bill, would have a big impact on state financial systems as well. I do want to note that when Janet Yellen made her comments about risk on the part of stablecoins, she did not anticipate or expect the expansion that this bill authorizes, which would greatly, I think, amplify the impact of stablecoins across our economy. With that, Mr. Chairman, I yield back.
Mr. Lynch yields back. Who seeks recognition? If there's no further debate on the amendment, the question now occurs on the amendment offered by the gentlewoman from New York. Those in favor, please say aye.
Aye.
Those opposed, please say nay. Nay. In the opinion of the chair, the nays have it. The nays have it. The amendment is not adopted.
Chairman, I request a recorded vote.
The gentlewoman from New York requests a recorded vote. All those in favor of a recorded vote, raise your hand. A sufficient number have raised their hands, and a recorded vote is so ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceeding on the amendment are postponed. We're on. Is there further amendment?
Mr. Chairman?
Of the gentlewoman.
Yes, I have an amendment at the desk.
A gentleman has an amendment at the desk. We'll pause for it to be distributed.
Mr. Chair, I reserve a point of order.
The gentleman from Montana reserves a point of order.